Morning, lads. Igor, Nandan,
Hello.
how's things going?
Hello, hello. It's going good, going good. Excited for today. We got
Yeah,
some news coming up
same here.
for the US dollar in about an hour, so
Uh-huh.
that's pretty much what I'm going to be looking for.
Cool, cool. Yeah, between you and Igor, you look a lot at the Forex pairs, right?
Yeah,
Yes.
Perfect. Yeah, I'll be looking just at the normal S&P 500, NASDAQ, as well as crude oil. So let's get the show on the road. Welcome, everybody. Again, first time I'm in the room with Nandan, so nice meeting you. I don't know if
likewise.
one of you guys want to take the lead so long. You're more than happy. My things don't normally set up until about half past anyway, so I'm more
I
than
can
happy
start
to hang
with
back.
the news calendar if you don't mind.
Okay. Yep.
Okay, just to pick. Okay.
Should be coming up. There we go.
Yes. So as we know, today is a Tuesday, and what I'm watching and we are watching, I think it will be during our session. It will be ICM manufacturing PMI and Jones opening. So we are waiting the news there. Maybe that can push market a little bit because we are right now in the Monday opening range. Actually, the Monday opening range is the same as the opening range for the whole last week for the major currency pair, most of them. So it was very boring. So I think that maybe this news can push the market and make a little bit interesting for all of us. So
Uh-huh.
the one of the things that I just want to share with you is there is one very important announcement that we are still waiting for tomorrow, and it's a Trump announced that the next round of the tariffs at 3 p.m. U.S. Eastern Time on Wednesday. So I just want to see what will be that because I see that a lot of traders writing market going to be a crazy or something like that. So I think that that can push market in any side. It will produce some kind of volatility, and I think that that news for me tomorrow is more important than these fundamentals today. So this is the something that I want to see how market will react. Because for me it's important because all these tariffs and all these things that push the market up, down, and everything. I think if we see tomorrow that a lack of the volatility, maybe
Mm-hmm.
market can reject Trump for the first time. This is something that I want to see because then we will start to be again in the normal market conditions because it's something that I expect because I remember the last time was Trump president, all these stuff just in April month started to in some kind of the normalization mode. So because of that, I'm a little bit concerned and a little bit waiting to see when will finally market reject Trump announcements and start to to be normal. So this
Okay.
this this is it. And I just wanted to ask you, Nandan. Okay, please can you tell me how to pronounce your name? Just
Yeah,
don't.
Nandan, you
Okay,
you got it. You got it
Nandan.
right.
Yes,
Yeah.
Nandan. Yes. Can you please tell me what do you watch for the major forex pairs and what you expect from the fundamentals this week? Do you have something
So
interesting?
yeah, of course. Fundamentals. So I never really pay attention to what happens in the news, meaning news announcements that are released in terms of like actual versus the forecast. I never pay attention to the actual numbers. I always pay attention to what's actually happening on the charts. So just like you said, we got news coming out in an hour. So I'm gonna look at how the market's gonna react to that news for the very first 15 minutes. Specifically, what I'm looking at for today, after today's news announcement, is going to be the pound US dollar and the euro US dollar. Those two charts definitely seemed a lot more interesting. Also, the dollar Swiss as well. Um, the pound US dollar and I believe the euro US dollar are in strong uptrends. I know for sure the pound US dollar is. I'm looking for they're currently consolidating on the 4-hour time frame, so I'm looking for a break of consolidation and their support. So if I was to share my screen really quickly.
Yes, yes, please, just to share your screen and present all of that and stuff. Okay.
One second.
I'm not seeing your screen yet, Nandan.
It should be. Hold on, let me try to refresh this. Okay, hopefully you should see it now.
There we go.
Okay, so this is what I was talking about. Weekly, we're on a strong uptrend to the upside, and currently what I have on my chart right now is a simple bar chart. It's very simple. I like to eliminate as much noise as possible, so candlestick charts are not something I use. I never found it to be beneficial to me. Um, So the trend indicators that I have currently are a exponential moving average. The green line is a 5 moving exponential moving average. The red line is a 12 exponential moving average. It just helps me identify what's going on with the trend. So currently we have both these guys pointing up, which indicates that it's currently in an uptrend. The weekly is currently in an uptrend. So I've established the weekly is in an uptrend. I'm going to move down to the daily and see how that pair, how it's moving on the daily time frame. Guess my trend indicator disappeared. But essentially, what I'm looking for, if we see we're consolidating in this range here from 1.30 all the way down to, I believe, a little bit below 1.29. I think my charts are freezing up here. Yeah, they are freezing up.
Yeah, just go click on the refresh button on your browser. That normally helps with me. It does do this sometimes. Oops.
All right.
Yeah, just
There you go.
maximize them. There we go.
All right. All right. So let me just rephrase, re-say what I just said. Daily time frames going sideways. I'm looking for a break of 1.2873 and then a move to the downside. So if I go into the 4-hour chart, okay, I got to refresh it again. We got a much smoother chart on the 4-hour than we do on the daily. So,
Yeah.
That is interesting.
It's done this to me yesterday for the first time as well. Quite a few times.
Oh, yeah.
But it's just a data issue, I suppose.
Oh, God. I'm going to stop sharing my screen and see if I can get this
Yeah,
to
maybe
work.
restart it and then we'll have a look.
Yeah.
Yes, while we're waiting, just to add, so you're absolutely right. When you watch a 4-hour chart and daily chart, you a little bit have better perspective about the major forex pairs because we have a range last 2 weeks. It's a very boring range, and we're
Exactly.
losing our edge on the lower time frames.
Igor, I don't know if you see that question in on YouTube. Maybe you can quickly answer that quickly.
Yes.
While Nandan's playing there.
Yes, this is the basic question. What is a forex stock, futures market, and how does it work? So there are a lot of markets that you can trade. There are, we can say, regulated markets and unregulated markets that we can talk about. The futures market is one of the most regulated and most clear market that traders can use, and it's a very popular in the last, I think, a few years. And a lot of U.S. traders use the futures market. However, people from the Europe we like a CFD market, like a forex market, where we can get a very good leverage. But usually, if you get a huge leverage, that can be, the problem for the both sides. You can earn very fast, but you can lose money very fast. So a lot of traders losing money in forex just because they risk a lot. And of course, we have a stock market, which is a famous market, and the most traded is a US dollar, a US market, and a lot of, I think there is more than 40,000 stocks that people can trade, and they're free completely. We can say different markets, but the trading rules and technical analysis and approach is very similar.
Yeah.
So traders need to try each of that market and enjoy which assets they like to trade.
Hmm. Yeah, one thing I want to add there, your futures markets generally are traded at a physical exchange. So you'll have
Yes.
like the Chicago Mercantile Exchange, or CME for short. Or you have the NASDAQ, where a lot of your tech stocks and stuff like that get traded. All things like agricultural, energy, commodities, indices, all those things are traded mostly on the futures markets, right? Same thing with stocks. If you look at your indices, basically they just aggregate composite of all the stocks that index is comprised of, right? Whereas your forex market, you don't really have a centralized exchange like the Nasdaq, for example. So yeah, I believe that is like all to do with banks and how they do their cross dealings, all that stuff. How those prices are determined. So
Right.
basically, rather than just like the different sort of, let's say, instruments you can trade on these exchanges, it's mostly got to do with, is it a physical exchange um, versus or a decentralized exchange, like not a physical exchange, like the Forex market, for example.
Yeah, and the Forex market, it's a bit different. The Forex market, you have two things going against each other. So, for example, the pound USD is not just the pound US dollar, it's the pound and the US dollar. So,
Yeah.
the way I like to monitor and analyze these pairs is I like to separate them. So, I like to put the pound 5 miles on the left, the US dollar 5 miles on the right, and see what is the pound doing against seven other currencies and what is the US dollar doing against seven other currencies,
Mm.
and then make my decision based off of there.
Yeah.
Take into account what's going on the larger time frames, overall market conditions. As Igor and Richard just said, the market, it's been pretty boring. For me,
Yeah.
I've seen it been pretty boring. Just a lot of consolidations, a lot of chop going on, and today we have some news, so hopefully they'll shake things up. But going back to this chart on the pound US dollar, the 4 hour chart is what I have up on here, and I'm waiting for a break of 1.286. And if this pair breaks this uh, area of support after the news comes out, I'm gonna first wait about 15 minutes, see how the markets are reacting to it. If I like the way the markets are reacting to it, there's not a huge gap or a price spike. I'd like to see 30, 40 pip spike. Maybe we won't get that, but that would be the optimal range. 40, 50. It doesn't really matter as long as it's below 75 pips of worth of a spike. I'd definitely be interested in trading. But if all those conditions are met, I'd be certainly looking for a day trade type of trade. I'm not looking to stay in this trade for a very long time. I'd probably exit with about I'd be comfortable with about 50 to 70 pips in profit, depending on how the pair is moving and how it continuations, how its intraday momentum is carrying itself. If there's strong momentum carrying this pair down to the lows of 1.26, then I'd be comfortable holding it till then. But I am not afraid of scaling out earlier. I'm not afraid of exiting the position earlier. It just depends on how the pair reacts to the news, really, and just seeing how the intraday movements are. So
If they react to the news.
yeah, that's true. There's
Yeah.
been so many times where the pairs just don't do anything. I mean, we also
Yeah,
have non-farm payrolls this Friday,
Yes.
that's
so
right.
that there it's not rare to see the market just go completely flat. We do
Mm.
have some news from Trump, as Igor said, so excited to see what happens.
Awesome. Igor, you have some charts to show, or
Yes.
Nandan, you still have something to
Yes.
show there?
Yeah,
Just
I'll give it
yes.
to Igor.
Yes.
Here we
Thank
go.
you. I will just share my charts.
Oh, we lost Nandan.
Okay. I hope he will return very fast. Meanwhile, just yes, here is Nandan. Yes, he's here again. So
Okay.
this is my 30-minute chart on British pound dollar. As you know, I'm like to trade using the relative strength index indicator and drawing the trend lines on it. So right now we have a bearish relative strength index indicator for 30-minute chart, which is one of the triggers that I use just to mark that today my bias on the daily session is a bearish, and I would like to sell on some interesting level today. But of course, the market is in the Monday range still. We don't have any move or nothing else. So one of the things that I like to watch is this blue rectangle right now around 38.2 price level. Actually, today the pivot point is on the same level as 38.2 retracement Fibonacci level for last 2 weeks, for example. So we can see how just the price levels align to each other. So as we can see today, we are almost the whole day below this pivot point area. So we are in some bearish mode. We are right now at a yesterday support area, and I think that we are waiting the news in this area right now. When we watch the bigger time frame, like Nandan said, we really can see the little bearish bias here, which is really, if you just watch, for example, any simple moving average, like simple moving average 50, this is the really some slow bearish move right now. And what I expect, and like I'm watching several levels. So one of the level is 1.28, and another level is this area here between 1.27 and 27.30, which can be for me very, very important support area where we can see the strong rejection, for example, and continuation of the bullish trend. If something happened and this area become broken, I can be in longer term a little bit on the bearish side, but I hope that we will keep this bullish bias for British pound dollar in next 1 or 2 months maybe, but of course we need to see that and analyze everything of that. One thing that I like to watch right now and sometimes is a simple moving average, 50 moving average and 1 hour chart. It's a very good indicator of the bullish bearish invalidation point for myself. Of course, that area is around 1.2040 level. It's actually today's high. So if we break that level and today just move higher, my bias will change and I will be bullish for British pound dollar. But there is one interesting thing that just Jannie said, and I really like that. And it can be a very good strategy for trading. And it's if we, for example, see the breakout today on the bearish side, for example, we went to 1.2860, which is a really good support area, something like that. What I would like to see is that price try to go upper 30 pips around these levels right now, and that level where we are right now can be excellent entry point for today's sell order, and in that case maybe we can catch 30-50 pips a profit if we have that kind of the of movement, because usually during the news we always have some bias, we have some movement in one direction, and there is always 1 hour or a half hour some contrarian trade, some bullish leg when we have a bearish move, and it's very smart sometimes to use that movement to enter at the better selling position. So I hope that if we get a movement downside, that we will have opportunity to enter in some higher level. So this is something that they watch. But really on this 4-hour chart for British pound dollar, we can really see, as you can see, the bearish trend line. So this bearish trend line is a really obvious. So I hope that we will see a bigger picture here, and soon we will see a bearish move. One thing that maybe a little bit afraid here, which can be just a technically problem, but I always think about this is is when we have a big bullish candle, for example, and then we have a three small daily candles bearish, but still in that range. Sometimes there can be a false bearish move and a bullish movement. Sometimes, of course, there is a chance for that. So I need to be very cautious in this case, and I need to monitor this a lot because a lot of times in the past I had a problem. But like I said, I think that it's a healthy pullback down. Is very good because I think that institutional traders would have an opportunity to enter into lower levels and catch this big movement against the US dollar. So I hope that we will see that. And just to add one very important thing that I think that we can see the bearish move today is the Aussie dollar. And I will just show what is interesting here. If we go on the daily chart, we can see that for last 3 weeks we had a bullish trend. I was bullish just from till the yesterday, and we broke this very strong trend line here. And this is the really I know when I trade a bigger or Forex major pairs, always one pair is a leader, for some trend. Usually, like Nandan said, I like to watch that strong weak currency to put all currency in perspective. And usually one currency against the dollar starts as a leader, and after a couple of days, all others start to go in that direction. So I think that choosing one is Aussie dollar today because the Aussie dollar already went into a real huge bearish move yesterday, and I think that there is a chance that all other pairs, at least for a couple of days, went into bearish mode. So this is one of the proofs that US dollar is a little stronger and stronger for this week and have a bullish bias. So this is the reason why I expect to see maybe a bigger bearish move today or tomorrow. So we will see. So
nice.
Do you have anything related to my charts? Anything that you see interesting here?
Not my side. Still looks pretty messy on all of them.
Yes.
Yes. It's really.
I guess everyone's waiting for some sort of direction. At least some strong sort of move somewhere that, carries through with a bit of momentum.
Yes. You're absolutely right because it can change just in a few hours from the bearish mode. We can go to the bullish mode. So we are still not in a really. But it will be beautiful if today the daily close just go below this big bullish candle. So it would be beautiful if the daily close today is below 1.2870, and if that happens, it's really great. So in that case, we can have a couple of days of bearish trend. So this can be very interesting for traders and trading opportunities. So
cool.
I think that.
Igor, can I quickly share mine? I still have to show mine quick. Thank you. Sorry, I'm handling the back end here as well, so I've got quite a lot of buttons to press. There we go. Should pop up soon. There we go. Right, so as you probably know, and don't know if Nandan, you followed what I do here, but I typically trade intraday, so I'm looking for liquidity sweeps, and I look for specific reversals with a few sort of things that have to happen during an actual reversal after a proposed liquidity sweep. Now, I do this on the S&P 500 and the NASDAQ as well as crude oil. So these vertical lines you see here is basically marking off the 9 a.m. to 11 a.m. Eastern Standard Time windows. Yesterday was a really good example of how you typically get these reversals during that time window. So we had this on the ES yesterday, on the NASDAQ as well. Unfortunately, both these markets moved too fast, so they weren't actual setups for me. But knowing that you typically get reversals during this time window that could often continue in one direction for the rest of the day, you can then use that information to, formulate a strategy. So, for example, good example here yesterday. This didn't happen on the NASDAQ, but it did on the ES. You see this green line here at 5,503 was an actual low that occurred all the way back here on the 13th, almost middle of last month, because we're in April already, which is pretty crazy. So price just ran that low, and then we had a reversal back to the upside. Now, rather than just trying to jump into a trade, I would then switch to a 1 minute time frame, which will be my execution time frame. And I generally just do a quick rundown of what it is I'm looking at here so viewers can get an idea. So this is that same line on the 1 minute. Price just ran it, and then we had to move back upwards again. So on the 1 minute, I want to start seeing a break of price structure. In this case, previous price structure obviously into that low as price took out that level, was making lower lows, lower highs, right? And then around about this point over here, price then broke that price structure point. That makes sense. You just get, that was the most visible price structure point. What would have been nice with this trade, although it just ran up, there was no actual setups, is if price, gave us a nice little bit of a swing here, then you could have used a price structure point lower down if price took that out. Unfortunately, that didn't occur, but price moved strong back to the upside, and I would then like to see fair value gaps that formed, and hopefully as low down as possible, prior to price taking out a price structure point, right? Because if price breaks a previous price structure point, just from a basic technical analysis perspective or chart reading, that could indicate that price is getting ready to reverse higher as well. So quite a few steps that need to fall in place. As I mentioned, I execute on the 1 minute, and you can see there was a fair value gap right there. But unfortunately, price only broke that price structure point there. You could have probably thumb-sucked and said that this was one over here if you were a bit aggressive. If that was the case, then price would have, sort of at that break of that structure point, although I can't really see one there. It's not really standing out to me. Then one could assume, that's a fair value gap. Now, what I want to do is, if a fair value gaps forms prior to a price structure point, I want to see a reversal, retest, and then at that stage, I'll have a waiting limit order, in this case, a buy order. Normally at the top end of that fair value gap, and then try to get long if price does retest that. That makes sense. Generally, depending on how high up this fair value gap formed, if it's lower down, let's say there was there one, for example, price retested that, then I'll just go place my stop at that actual swing point low. Hopefully it is a swing point low. Or if you get these really, really long sort of like candles that forms part of, or the middle one forms part of the fair value gap, then you can go place your stop if it's too far away from the actual bottom at the low of the first candle that forms part of the fair value gap, if that makes sense. And then generally I'll go for a trade multiple lots and then take half of my lots off at a 1-to-1 and then try to let the remaining run as far as possible. Generally a 1-to-2, 1-to-3 ratio on that one. Right, so that's a quick rundown of what it is I do. Again, this typically works really well on the indices, S&P 500 as well as the NASDAQ. So for today, this brown line over here just marks off the start of the day. I want to then look to the right, and prior to price entering into the time window, or as it enters into my timing window, knowing that we potentially could get a reversal during that point, I want to see where my overnight session highs and lows were, which was around about 5,619 to the upside, the low currently at 5,573. So you can see I made a bit of a zone here. They are not actual supply demand blocks or whatever you want to call them. They're just like a little zone that you can see we got a cluster of lows here of yesterday, which was a higher low, not actually a higher low. price actually didn't break this high again. But there's sort of like a cluster of lows very close to each other. So if I were to take a trade, I'm willing to swing either up or down. I don't really care about direction. So let me just take my magnet mode off. Price take out this low, start reversing upwards. I got a nice price structure point that I can see visibly on the 1 minute time frame. That gets broken, get a fair value gap, then only then will I be willing to execute. Okay. On the upside, same thing. We got yesterday's high around about 5,626-ish. And then today's session high thus far is 5,618. So same thing. Want price to get in today, either just break this high or break the upper high. Quite often you'll see as soon as that price structure break occurs, it doesn't have to take out yesterday's high as long as it takes today's high out. I just mark this as a zone where I want to start seeing that sort of reaction from it. Reversal to in the opposite direction, price structure break, fair value gaps, and then see if we can get a retest of it and then trade. So it's what they call a liquidity sweep strategy. Crude oil yesterday, as you can see, the lows of the day actually, price just shot up straight. There wasn't a setup yesterday. Price didn't take out overnight session highs or lows or previous days highs and lows. We just had this one heck of a strong move to the upside. So for today, currently on crude oil, I'm looking at prices very close to around about the 71.69 level, which price is currently testing. On the downside, we got 70.84. Now that price has broken that upper level. If it just continues from here, then so be it. I've got no trade. But we're going to start seeing weakness here without price exceeding that level by too far. I'll switch to the 1 minute. And this is the issue I've been having these days with a lot of volatility or very strong one-directional moves, is you just get these like rocket moves in one direction. You can't really see any nice price structure points, if that makes sense. So price might just continue higher, or it might just reverse from there. But again, on the 1 minute, I want to see price take out a price structure points all the way down here. Maybe I get lucky, price does this, and then down. And then we'll at least have a nice price structure point to work with. See if I get a fair value gap, that sort of thing. See if I can get into a trade. But crude oil since yesterday, very strong one-directional moves, skyrocketing to the upside. So unless I very soon get a nice price structure point to work with here that I can easily spot without trying to see things that's not really there, and a reversal and all the rest of the steps that I follow, then unfortunately crude oil might not be presenting me with a trade setup today. How are we doing on time here? We've got 12 minutes before that news also comes out. So generally when high impact news events come out, either on the indices as well, even with news events that would influence the crude oil market, then I'll rather stay out for a few minutes, and see if those levels are broken. Because, there's quite a few things that need to happen. So quite often I find around about the 9:30 a.m. mark when the New York session opens, your indices quite often break those levels and you get reversals. If you get like these news events like at 10 or whatever, price might run sideways. They run these levels at that news event, or you just get one directional move, you don't get a setup. But in this case, let's say price breaks this sort of upper zone and then start moving lower, then because I'm working on a 1 minute time frame, price first has to break price structure. It gives you quite a bit of time to actually prepare to get into a trade. If things get too volatile and you just see a lot of madness up and down, then I'll be happy to stay out and move on to the next day and see if we can get another trade again. But Nandan, I just wanted to show you what it is I do. So smaller day trades, smaller time frame, and just day trading, either direction.
So do you mainly stay on the 1 and 5 minute chart, or do you move to the higher time frames like the 30-minute, just like you have, or the 1 hour?
Yeah, I look at 30 minutes or 1 hour time frames. Obviously, trend that's not really that important for me because quite often, if you get like a reversal, and there's been quite a few last week actually, like this for example. Although the trend's down here on the ES, trade over here, trade setup, boom, back to the top of the range. That move over there is more than sufficient enough to make
Gotcha. Okay.
a decent return for the day. You can see as price actually exited that time window, price continued lower again. So it's more day trading. I won't say scalping per se, because on average I'll keep a position anywhere from, I generally hold it between 5 to 12 minutes. I mean, the longest I've been in was 20 minutes, so you can't really say scalping. But normally the moves are sufficient enough, especially if you trade the indices, to make a decent, decent movement to make a decent amount of money out of it, if you're obviously right?
Right.
So yeah,
I
that's what I
believe
look at.
someone has a question for you.
Hmm.
Actually, I guess all three of us can answer this. Max Thomas asks, "What's the best way to execute high frequency trades manually?" I personally
Uh,
never do that. I don't, do high frequency trades. I'm a swing trader. I like to stay in trades a long time. Occasionally, I'll do intraday type of trades where I'm in a trade for 15 minutes up to a couple hours at a time, or maybe even a day. But I'm not an expert on high frequency trades at all.
Yeah, Max, from my side, I think if you're a beginner trader, and this is not, any advice or whatever, high frequency trading is going to eat into your commission most likely. Um, high frequency trading is mostly done, or is, I think, primarily done with algorithms, which is basically way faster than we can. And they literally go for tick up, tick down, and repeat that hundreds and hundreds and hundreds of times a day, thousands of times per day. I don't even think it's possible with some trading brokers to try to do this manually as well. They could even block you doing that. But high frequency trading manually, I don't think you stand a chance to actually become profitable with that. I might be wrong. I don't know what you guys think.
I agree with that. When you get that low, or that low in terms of frequency and holding your trades, your risk to reward has to be significantly lower. I mean, you're expecting a tick up or tick down. You're either a 1-on-1, 2-to-1. I don't know how you can go to 2-to-1 if you're just looking at one tick, especially. And if you get a little bit of volatility in there, man, your whole account could just be wiped out.
Yeah, I mean, I primarily focus on being very patient. You know what you're looking for. You stay focused for that, and you
Right.
execute as good as you can, trying to get the quality of your trade and the execution as good as you can. Because I think if you're going very low time frames, you're executing trades or lots of them every minute or every hour, you're going to get tired. You're going to lose focus.
Yeah.
You're going to pay lots of commission. Your win percentage has got to be excessively high to actually make profit out of that.
Yeah.
And, a lot of traders burn out like that. So unless you have, for example, algorithms that you either programmed yourself, if you can do that, or purchased, I won't know if that really works. But unless you have something that can assist you without the human touch doing that, then that's potentially a way to do it. But manually, I don't know. Don't think so.
Yeah, the stressful, it's extremely stressful to be just sitting in front of a computer and clicking buy, sell, every single minute. Um, just take a take a step back. You can go on the higher time frame, stay in the trade a little bit longer, see how that works for you.
Yeah.
Uh, understand what you're looking for. You got to have criteria as to why you're entering into a trade. With high frequency trades, I don't know what your criteria is personally, but you really need to know why are you entering a trade. And by the time you make that decision or find out your why, you might have already slipped. The opportunity might have already slipped. So
Yeah. And again, like I mentioned, the commission side for
yeah,
trading, what's it
right.
in there, will definitely rack up. If you look at high frequency traders, that's they tend to sit very very close. There's offices to an actual physical exchange. Very very fast lightning speed, fiber lines, all that sort of stuff. and they also pay way less commission for that opportunity to trade high frequency than us retails would. So for them, it makes sense having access to those algorithms, being very close to an exchange, the best technology possible, and yeah, I don't know,
I just
difficult.
want to add a little bit. I was working in one high frequency trade company just 5 years ago, and
Okay.
just to share a few things about that. First, let me answer this question. So, if you want to manually to do that, because it's a really 100% sure it's a bad idea. If you want to do that, to a lot of trades to execute without any plan, it's really crazy. You need to enable one-click trading on MT4 or C Trader or something like that, and they use hotkeys for rapid execution. So technically you can do that, but it's a really bad thing because you will blow up your account in one day. So the commission is very high, and it's a huge problem. Now, if you
Yeah.
want to do a high frequency trading in the forex market, it's absolutely I can tell you it's almost impossible because the forex market is one of the efficiency markets. All that pairs are correlated. For example, euro dollar, British pound dollar, dollar, Kiwi dollar, all that pairs are correlated with dollar. So there's no edge that you can make. If you make two sell orders on euro dollar, British pound dollar, it's almost the same trade that you make. So there's no way to execute high frequency trades. Even you make algorithm, it's almost impossible. So all that companies that do high frequency trades doing the stocks market, and usually that algorithms are based on that when some stock is based usually on mean aversion. I can tell that. So they're looking for when some stock high is high or low is low, too much, for example, 5% or 10% up or 10% down. They know that the portion of that stock will go to some mean aversion at some point, and they when they do that, they have an algorithm that on every single stock, if you apply that algorithm, you will make some kind of the profit. Usually, all that high frequency trading algorithms have 51% winning rate and the risk 1 to 1, something like that. And when
Yeah.
you run that, they run on believe or not, thousands and thousands of stocks in the same time. And the way that's called high frequency trading just because of that. So that algorithm can apply on every single stock. They run on all that stocks, and in that moment, they create some kind of the profit. But we don't have that kind of the spreads. We don't have a platforms for that. We retail traders, we don't have ability to do that. Even if we try, believe me, you need a lot of capital and leverage to accomplish some profit there. So I think for us retail traders, the high frequency trading is, I think, impossible for profit.
Yeah.
And you will be much
I
better as
agree.
a manual trader. Yes.
Yeah.
So
Guys, we got a drop here on crude oil again. Just straight up, straight back down. So I'm going to be waiting here for another 2 minutes. I don't know if you guys want to show something in your charts. We got that news coming out very soon
yes, 1 minute.
because I know you guys are really gearing up for a massive move in the forex markets.
Some move, any move.
Yeah.
So not passive, just any move. Just wait for that.
Well, let's see.
Yeah, if I can share
Yes.
Yeah.
the tool I actually use on my screen, it's for confirmation for entering a trade. So hopefully you guys can see what I have on my screen here. It's a heat map tool. So this is the session. It's the main session, current session we're in that I pay attention to. On the left side, it's the Asian session, so I'm not really paying attention to that until later in the day or when the market rollover happens. But for right now, what this chart shows me is, what this heat map shows me is what's currently going on in the market. Where's the money moving and what is happening? So you can think of this as like a candlestick chart, just put sideways. What these percentages mean, like for the pound US dollar, it's currently at 0.43%. That means 1% of the pound US dollar, the pound US dollar is quoted at 1.28. So 1% move is 128 pips for the pound US dollar. It's different for every single pair. But what this heat map tells me is how much the pair has moved since the beginning of the main session. And what I use this tool with is for entry management. So it does not tell me what the trends are or how the market's um, moving on the higher time frames. It purely just tells me what is momentum doing at the point of entry or at the time I'm looking at it. So right now we see we got some pound. Pound is on the left of on the left side on these pairs. So it's red, indicating the U.S. dollar is the one controlling the move, or U.S. dollar is stronger than the pound. So that's why it's red. It's going down. Um, so what I'm looking for is 6 out of 7 of these pairs at 0.2% or higher, and 6 out of 7 of these pairs at 0.27% or higher, and the cross currency that I'm trading. So if I'm looking at the pound US dollar, I want the pound to be 6 out of 7.25%, or the US dollar to be 6 out of 7 going in the same direction. So I want consistency in terms of strength or weakness. I want every single pair going in the same exact direction. I don't know much about footprint charts, but I think that also has something to do with order flow and showing you where the money is going. So this is just my tool that I use to understand what's happening in the market as of at the time of entry. It helps me with whipsaws, fake outs, and all that stuff. Because if I have a significant break at a support or resistance level, I want to make sure I have money backing me. I'm a little
Yeah.
crumb in this whole in the forex market, and I'm just going where the money's moving. So I'm just a little leaf in the wind, and I'm going where the wind is moving, and it helps me
Cool,
confirm
cool.
trade entries. So we'll be looking. News has already come out, so I'm going to take a look at how the market is reacting to this
We
news
have a
announcement.
bad news for US dollar right now. Yes.
I'm gonna stop the screen sharing for right now.
I will share just a Forex Factory just to see if you want to see the results.
Should I share your screen there, Igor? Here we
Yes,
go.
just to see. So, manufacturing PMI is 49, and the job opening is 7.5 million. So we have a bad news for US dollar. Anything that good for US dollar is manufacturing prices, but as we can see, the market at least doesn't react on this news. So the US dollar is still very strong. So we are around 1.2890 level, and there's no any strong movement, either upside, either downside. So after this news, nothing. So this is not good for the traders because there's no move right now. But I hope that something will happen, that we can just break this Monday range. So I would like the price go to the 1.2860 or 70, something like that, just 20, 30 pips down, just to see any movement. Because we are on support, I hope that we will break this range, going the more downside. So
Okay.
right now is a little bit still boring. What to say? Still boring. This is not good.
Yeah.
This is really. I don't know what to say. I'm afraid that a lot of retail traders lose money right now, because a lot of traders enter into positions right now, and they have some ideas, but the market is sideways, and just suck all the money of the retail traders, and this is something that I don't like. Because,
Yeah.
But we know that the market is the place where patient traders take money to impatient traders. So
Right. I agree with that. When you have the market conditions when they're not trending, when you look at the overall market condition and it's just a bunch of sideways movement, you really have to manage your expectations. You cannot be expecting 100 pip moves. You got to really lower what you're expecting out of the markets. 30, 40 pip moves at max is probably what you're going to get. And
Yeah.
the money saving tip is to expose yourself to less risk as much as you can. Go in with a smaller position size. In these times, I like to scale back 75% of my actual position size. I don't like to go in with a full scale position because I'm taking on too much risk. It's an intraday style of movement, and when I have larger trend breakouts, that's when I like to go in full scale, and that's when I like to be really aggressive because I can stay in the trades for longer. I have more stable movements, and
Hmm.
on the higher time frames, and it's just way less stressful. You'll see it yourself when the markets are trending. I can't show you that right now because that's not what the market conditions are showing, but eventually when they change, the moves become more stable. But when they're in the position they are right now, you have to be aware that the stability of these movements and how long they will stay going in that direction are not the chances are not on your side. You're not going to be in a position for a long time. So
Yeah.
manage your
Yes,
Agreed.
expectations.
yes, I
Agreed.
agree. Totally agree. So just to show, if you want to see the US dollar right now, what's happening with US dollar just after the news. So I'm watching too, and as you can see right now, it's a little bit still it's a little bit bullish move, but still very slow moving. But when I see the chart right now, as you can see, I put a pitchfork here, took a low and high from the last 1 year, and can go to this inversion point here. It's around 105 level, and it will be good. In that case, if we reach this level, then that means that euro dollar and British pound dollar will make a deeper move down to 1.28 or 1.2730 for the British pound dollar, and then we can see another bullish push. But like I don't like this way of movements because if we continue these slow movements in US dollar, I think that I will lose my mind.
Yeah.
Yes, it's really nothing really. So I hope that something will move the market. So the only way that we move the market is to wait the Trump tomorrow, because he's a star number one. He's the he's stronger than any fundamental news right now. So we will see
Absolutely.
what will happen there. I don't know. At least I like to hear sometimes Powell and his way talking about the crypto, for example, Paul, because he really sometimes go away from the U.S. dollar and concentrate on some other things. So we that were connected to the U.S. dollar, it can be very boring right now for us, and it's not smart to trade some exotic pairs. I'm trying to watch something. Actually, I have one chart. Maybe we can just. I would like to hear your opinion. One
Yeah.
chart
Please share.
that I just thinking a little bit about that. I will just stop screen and I will present share the screen like like I'm losing all the time. Window. Sorry, some problem. Okay, I will share entire screen because I have problem uh, with with the charts. I will do that in just a moment. Okay. So what I'm looking for is a EuroCAD because I'm trying to find some pair outside of US dollar, and I'm watching for a time here something interesting, maybe more on technical analysis. When I watch the fundamentals, the euro and the CAD are one of the weakest currencies right now. So the euro euro and CAD are very weak. I think that the measure of the weakness are the same for these currency pairs. However, I watch, for example, from the beginning of this year, I took the low and high, put a Fibonacci retracement, and what I saw is that we reach a high, then we went down, then we go to this level 43.6. There is a rejection here. We are right now here, and maybe this can be continuation to the bearish side. So I'm thinking about maybe some short trade if I get additional trigger for EuroCAD. But I just want to ask you, what do you see about this setup? I put it on just maybe 4-hour chart is better. Maybe this is a little bit better if we watch. What do you think about this chart and setups that I show rated to the EuroCAD?
Well, looking at the EuroCAD, I'm looking at your screen right now. So it seems like, it was in a long-term uptrend. I'm just looking at a general outward view of this. So it wasn't a long-term uptrend, and it started to consolidate and pull back, and currently it's trying to fall back into that long-term uptrend. So what I would be aware of is there's not enough room to move to the upside. The pip potential, you're going to be running into a lot of resistance on your way back to the highs. So uh, certainly manage your expectations on that as well. I like to see a clean looking chart with a lot of separation and smooth looking chart. I don't like to see V shapes how we have here. I
Yeah,
like to see more
it's
of a U.
shape, yes.
Right. When you have a V shape, that indicates an instantaneous shift in momentum, which indicates a less, um, a complete change in momentum. And I like to trade when things are moving smoothly. When you have instantaneous shifts, this is on a larger time frame, so that's a little bit more forgiving. But when you have those type of moves on a smaller time frame, that's when you get into fake outs. That's what a fake out is a complete change in momentum. Uh, this is a longer term chart. I believe this is the D1 chart, right? So you know, look at how the smaller time frames are forming and feeding the larger time frames. We've already established, hey, okay, we're going with the trend in this case, but um, your pip potential and you have a lot of resistance in the way is another factor to consider. So understanding that. Um, Personally, if I was to get a signal on this pair, looking at my heat map, and I see the euro is completely strengthening and or the CAD is weakening, man, I'll be interested in buying this pair, but I would enter in with a less lot size and scale back my position, be willing to manage my expectations, lower amount of pips. I'd be fine with getting 30, 40 pips out of that whole trade, and then I'd see how does it react. If I'm into that pair and it goes all the way to the highs, I'm okay with leaving a small amount of my position in there and just letting it ride. Let your winners ride. That's a very important lesson to learn as a trader as well. Um, you can certainly take profit, but leave a little bit on the side to see where it goes, and you'll be surprised sometimes.
Yes, yes. This is something. Of course, if I trade this pair, maybe I will try some longer term short. Of course, maybe, but like I said, some additional trigger, maybe some bearish engulfing pattern to happen right now, and because I'm watching this, low high, then we start to go down, then some kind of retest of some level in this area, and then I go again to go lower. So in that case, I would not like to buy because I don't like these levels. I don't like these
Right.
levels. So maybe the good idea was buying at 38.2, between 38.2 and 50 level. This area was interesting for buying, for example. It's really interesting for buying. And but right now it's of course we are too late here. But this year I had several swing trades. I have a buy Aussie dollar. I try to buy US dollar, Japanese yen. All of them are break even without profit, but they see how that swing trades are really hard to catch, especially to catch some bigger trend. It's really it's really hard to trade it that way. I really like to trade in today's sessions, and I have much better profitability there. But sometimes I like to make some small swing trade. It's
Okay.
interesting. So
Yeah,
yeah,
actually, gold is making a strong move to the downside. There is some yen strength in the market right now. We do have 7 out of 7 yen pairs going in the same direction. So if I can share my charts, I'm going to share my MetaTrader 5 charts this time. That's actually
Yeah.
what I use mainly. I like to have all 7 charts at the same time on one screen. So let me uh, pull this up really quickly. Give me 1 second.
yes.
I have like 5 or 6 tabs open, different windows open.
While we're
All
waiting,
right.
just to say to Andrea, we date a possible recession. So it's we need to wait more to see about recession. So right now it's just a regular data, but we will see. We will see soon about recession. What the economists say will say in the next few days,
Yeah.
especially on Friday.
All right. So yeah, taking a look at the yen pairs in the foreign exchange market right now, the heat map is telling me that the money is moving with the yen pairs. The best pair that is currently moving right now, the highest percentage, is the pound yen, which is this pair right here. Um, this is 15 minutes after the news, so this is a time I'd be looking to enter into trades. And obviously today is more of a momentum-based trade. I would, if I was to look at the daily time frames on all of these charts, let me minimize one of these so you guys can see this a little better. Um, Look at these daily time frames. None of these guys have crossed to the downside. They're all kind of going sideways. They're from major they're against the major trends. There actually is no trend. It's just
Yeah.
complete consolidation at this point, and it's trying to figure out where it wants to go. So, with that in mind, and with the chart structure in mind, these guys don't look smooth. They look pretty chopped up. There's a lot of spiking happening, unstable movements. I don't like to see that. So, if I was to take a trade, and if I felt like momentum was continuing, I have all these pairs on the 15-minute time frame right now. I can certainly look at the 5 minute as well. The 5 minute is giving me a little bit of a better picture. You know, I like to look at the 5 minute, 15 minute, 30 minute, just which pair is giving me, which time frame is giving me the best story at that time of entry. But
Okay.
as we can see right now, there is some momentum in here, but they're starting to teeter off. The juice is kind of coming out. If I enter into a trade and I have confirmation from my heat map tool, I want to be in positive pips immediately, 30, 40 pips within the first 5 or 10 minutes. I'm not in here to stay and manage losing positions. I want to be profit immediately or I'm out quickly. I don't care if it's in the first 10 seconds. If I'm minus 10 pips within the first 5 seconds of a trade, I'm out. I get a little skittish with that type of movement. Um, I'm not going to trade this today. I just don't want to expose myself to the conditions we have in the market. But if you are feeling um, like you just absolutely had to take a trade, I think honestly your best bet for this exact moment of time, it would definitely be the pound yen. If I can show you the heat map right now. So this is what the intraday momentum looks like. Let me show you what the heat map looks like. It's kind of lit up like a Christmas tree right now, but
While we're waiting, please tell me which heat map do you use?
this heat map, it's Forex early warning. It's the heat map from them, and it also shows what's happening in gold right now too, and a crypto side of it as well. Crypto. Yeah, let me check what's going on with crypto really quickly. Crypto. There's not much going on with crypto. I can look at this and I can understand what's going on in the market within 30 seconds. I don't need
Yeah.
to look at 30 different charts. These are my charts pretty much for the intraday momentum side of things. So looking at this chart, I'm going to try to zoom in for you guys here. If we go into the main session side of this, we see the US dollar doesn't really have consistency. There's a bunch of pairs, the US dollar's on the right over here and the US dollar's on the left over here. So I want consistency. I want every single pair going in the same exact direction. US dollar is not doing that. Swissy is doing that for uh, majority of the pairs, but again, the percentages are not that great. So the consistency aspect in this case is I don't have enough momentum pushing them.
Mm.
Sure, they're going in the same direction, but not enough momentum for me to indicate a consistent movement. What does have consistent movement is the yen pairs and the pound pairs. Now, what I said earlier was, for example, in the pound yen, it's not just the pound yen. Pound yen is pound and the yen. Pound 5 miles on the left, yen 5 miles on the right. What is going on with all the yen pairs? And what is going on with all the pound pairs? Well, we can see on the heat map, we got clear yen strength in the market in the intraday time frame. And we have um, it's not fully consistent. It's 5 out of 7 pairs at 0.2%, higher than 0.2%, and going the same direction. But the major driver is the yen pairs. The pound pairs is just an addition. It's just the
Yeah.
cherry on top. When you have both pairs, if the pound yen was also 7 out of 7 or 6 out of 7 going in the same direction, then that's what I like to call a slingshot. That's when you have very, very strong moves. And when you have slingshots, certainly new trends can form and they can blow out of support and resistance areas with ease. Um, as of right now, though, this current period of time, the pound yen is looking like the greatest um, entry trend, or sorry, entry into the intraday momentum side of things. But since we have, I'm going to switch over back to the MetaTrader charts. Give me 1 second here. Since we have the condition of the market, I'm not looking to stay in these trades for a long time. If I do get into the pound yen, if I go into the 15-minute time frame, it's currently at a significant level of support on this 15-minute chart.
Mm.
Um, Looking at how all these pairs are moving, I want them to be moving at the same time. I don't just Igor mentioned this earlier. You have one pair that really drives the movement, and I think the same thing happens on the smaller time frames too. There's always going to be one or two pairs that are completely driving the movement, and then you have the rest of the pairs that kind of follow like dominoes. Uh, they kind of catch up to what the main player is doing. So um, the momentum on the momentum side of things and intraday movement, the movement started here, right? We can see the movement clearly started here on the pound yen with this fresh cross on the 15-minute. And you can kind of see that with all the pairs here, where the movement started. Maybe not so much on the CAD yen or Aussie yen or Euro yen, but surely on the dollar yen and the pound yen. At this point, with the current market conditions, I'm way too late into this trade. I'm not going to be taking this.
Mm.
I don't care what the heat map says. The reason, well, the market's choppy and we don't have higher time frame trend support on these pairs. If this chart was looking a lot better and we had more angle separation, smoother, uh, cleaner uh, room to move to the next support, we only got about 10 pips to move to like the next major level, which is right here, which is pretty much already there. It's teetering in that zone right there. So I don't care what the heat map is telling me. It's not a good day to trade. I'm going to sit on my hands. I'm going to wait until the next opportunity presents itself and I'm going to go with that. You get a bunch of momentum every single day. The market is constantly moving, but it's your job as a trader to understand what the overall conditions are and how they play into the heat map as well. The heat map is just one side of the aspect of this whole trading of my trading system of what I like to see.
Yes, and then I just want to ask you about these heat maps that you're using.
Yep.
So you use them just to mark which currency pair you want to watch, or you use them additionally for something. Yeah, more of
Uh,
that.
so the heat map is only for trade execution. It's only to see what is happening in the market at the time of entry. Everything else, larger time frame analysis, multiple time frame analysis, I'm doing that on my end. If I indicate to myself, that there is a great trend, great market conditions, I'm going to look for my heat map at a critical point, a price alert being breached or a significant level being breached. I'm going to now look at the heat map for confirmation to enter. I want to make sure the money is on my side. The heat map isn't anything, it's not.
Just because of that, I asked you because if I want, for example, to use a heat map as additional trigger, what you want to see just as additional confirmation when you want to enter into trade. Just give me an example when heat map can help you to avoid some trade.
Yeah, of course.
Yes,
So
just an example for that.
yeah, let me try to find a chart for you. I mean, let's look at gold for example. You know,
Yes.
we have a gold heat map on here. So let me pull up my charts over here really quickly. Oh, I actually had them up. Whoops. Let me get that back up for you guys. All right, hopefully you can see my charts.
There we go.
Yes.
Okay, so let's say that gold was at the very top of its you know, it's at its high, and I'm looking to buy this pair. If gold is at 3149 and it breaks its resistance, and I want to buy this pair, well, then I use the Forex heat map to confirm, is gold moving against all currencies in the same direction, and how is the cross currency doing? I'd
Hmm.
like the best scenario to be gold being strong in this case, and US dollar being weak, because XAU USD is XAU against the US dollar. So we also have XAU AUD, you know, gold against the Aussie dollar. If I wanted to buy this pair at a significant level of resistance, in this case, it's 5037. Well, when the price alert hits, I'm looking at my heat map. I'm understanding the market conditions. How are the market conditions playing out? If it's perfect market condition, we got trends in place, then I'm looking at my heat map to confirm that trade entry, and then I'm in that trade and I wanted to immediately go into positive pips. I cannot have, because I'm trading with momentum. If I'm momentum means you know, short term, you
Follow
know,
through. Yeah.
yeah, right. I want it to go follow through immediately. I can't just
Hmm.
be here waiting around for momentum to kick in, because by the time I wait around, I'm just managing a losing position at that point.
Yes. Beautiful.
Gotcha.
Yeah, hopefully that made it a bit clearer about how do you use the heat map with the overall market analysis. You know, you're doing the market analysis yourself. That is completely on you as a trader. The heat map only tells you what's going on at the time of looking at it. It doesn't tell you if it's trending, doesn't tell you if it's choppy, doesn't tell you if it's time to scale out pips or scale back. You know, it just tells you what has happened, and you make the decision
Yeah.
yourself.
Well, at least you're planning
Yeah.
to execute. Yeah.
Right.
Igor, something to show?
Yes, I just make some plans for future trades. I'm thinking
Okay.
what to do. I mean, just share a screen a little bit, just to show
Okay.
what they want to see right now. So, like I said, I'm watching the British pound dollar. I hope that you will see that. Yes, you see that. So what I'm watching right now is I'm watching maybe if someone decide to maybe enter short for British pound dollar because overall we are short. What I want to see is that right now relative index touch this trend line. So that can be here in this pivot point area around 1.2920 level, somewhere there. If that happens, it's maybe 20 pips from now. That can be interesting, maybe point for selling, but there is no either the up movement, either the down movement, and it's dangerous for buying or selling. But this is something that I really just watch and think what can happen here, and I would really like that to see maybe to enter in some bearish trade, maybe to keep that bearish trade because of the market structure that we can see the larger pullback, maybe that can be very interesting. What is one very important thing, just based on my experience, and that we just show with you. So psychological levels. So each round number is a psychological level. So 1.29 is a psychological level, and there is one good thing that's happened right now, and it's that last, as we can see, I think several hours we're below 1.29, And this can be very interesting because if we make some false break above 1.29 and go against that again down, that can be maybe the end of retesting 1.29 and maybe some larger pullback down. So this is something that I watch too, and I think that that euro dollar is in very similar position right now, and you will see that it's not by accident. I will just put 1 hour chart, maybe it's for betting, for better see. So as you can see, we're only 4 pips for psychological level 1.08. So it's really, sometimes when I watch markets, either that's a different markets, we can see how price oscillate very close to the psychological levels for the major currency pairs in the same time. And this is the really interesting thing. Of course, we are not for Aussie dollar because Aussie dollar, Kiwi dollar, US dollar CAD, I do not watch in that way because it's a commodity currencies. They are really correlated with commodities, and it's interesting that these Trump tariffs can really hurt these economies. So I trade them only in long term. I really don't like to trade them like euro dollar and British pound dollar in the daily session because they're really slow. So it can be really dangerous. You can really hurt your account, and the size of the mini lots and lots when you use Aussie dollar, Kiwi dollar is a little bit tricky. It's a little bit and sometimes bigger commission and the more money in the play. Even you trade with the same 2 lots or 3 lots on the both pairs. So this is something that I really watch, and this psychological level is interesting. Right now we're 1.08, so it's really interesting what will happen here. So for traders in these circumstances, I think that the best thing is maybe to wait at least 1 hour after the news just to see what happened there. And usually you can see the first candle can be false candle. It's very often after the news. So so right now only the right price levels can be interesting for trading. But sometimes just to chase the trade, to enter into the trades, just only not to be not be boring. it's not a smart idea. So sometimes the best thing is no trade whole day. So yesterday I had a trade, but this day maybe it will pass without any trade, and I think this push higher maybe can be interesting for selling, but I don't know. I don't know what will happen here because it's really slow movements here right now. Do you have some trading setup? Richard,
I have one that's actually triggered, guys. I want to show you that if possible.
Oh, please, I'm stopping.
So you stop there. Let me just add that to stage. So there was a beautiful setup here on the NASDAQ. Remember these lines that I drew? Yesterday was a low. We had this level over here. Price just pipped it, moved upwards. We had a beautiful price structure point, this one being on the 1 minute. As price broke that big fair value gap, and you can see we just had a retest of that and potentially a bounce to the upside.
Yes.
But that being said, I am already short on crude oil. Remember, guys, I was saying if price takes out that level, it was around 71.69. Again, that was just yesterday's high. Am I right about that? Yeah. Price took it out, moved lower. And remember, I was complaining about not seeing proper price structure points. They were way down here. And there were 2 big fair value gaps, one up here, one lower down. But as I've seen recently, you have to be a bit more aggressive getting into these trades. You can really sometimes decide, I want to get into this fair value gap. The market's too weak after a reversal back into it or a lower fair value gap, and it just runs away from you. So these structure points, I couldn't really say that was a price structure point. This one was a bit more visible. And luckily, price broke that. It pulled back. I thought potentially of taking a trade at this fair value gap here. Let me just get rid of that. See price right over there, pulled right into it, decline lower. But I waited for this one to be hit, and now we've had a decline or drop to the downside. Whether that will now continue, who knows? So I've already reduced my stop, which was above this higher fair value gap, to slightly above this low fair gap where the trade was actually executed. So let's see where things go. Remember, I was saying I'm looking for a one-to-one normally. I'm just going to today see if we can just take out these lows over here and be done with it. Because we've got a cluster of lows around about the 71.04 level. Okay. So what I can also, when I sometimes do, if I add a take profit level, maybe just place that slightly above that sort of area, see if that can get hit. With this drop now, if price takes out this previous low, this most recent low over here, then I'll probably go to break even with a few pips in my favor, and then either get stopped out on my trading stop or hopefully see price hit my target. And that's the trade. Beautiful reversal after price took out the level, in this case the previous day's high, with a reversal to the downside. Break a price structure, lots of fair value gaps, and yeah, picked one, went short, and that's the setup. Hopefully it works out. Right, you guys got anything to add? I think we've got about another 10 minutes before the session finishes.
And one question, Richard, when you trade these strategies on crude oil and NASDAQ, can you tell me, did you try the same strategy on a little bit higher time frame, and did you have any success in that?
No, I've tried doing this on a higher time frame. I mean, the 2 hours that I look for those reversals is just enough time for me. It's also late in the afternoon here,
Yes.
which is perfect for me to focus during only those 2 hours. I know I generally sit with a reversal during those 2 hours. If you're going to scale up to a higher time frame, then you might have potentially missed quite a decent sizable move. Because on the smaller time frames, these general reversals at these levels will generally start presenting themselves prior to obviously a higher time frame. So I'm willing to take that risk, although it is on a smaller time frame. You need to be quite on it and really focus. But again, I only trade during a 2-hour windows per day, and after that, I just go home and that's it. So I don't find that this strategy works on a higher time frame. But I'm sure there's some way that it probably could. Just haven't looked into. Well, I looked into it. It's just the 2-hour time window. If you scale up in a higher time frame, then you're going to have very few setups, in my opinion.
Yes, and tell me, when you watch that 2 hours period for NASDAQ, for example, when you, for example, you want to buy and you want to catch some low there, that low that will be created, do you find, for example, is that, for example, Euro session low or
very often,
very often, yes.
Extremely often.
Yes, yes.
Very often. I mean, I can go back to, you see all my charts are marked up with previous days. This was yesterday's. Not so much the day before, but very close to the actual high of that day. Straight up, although this was up and down. But to a very high degree, you'll find during that time window, here's a beautiful one as well. Reversal. There's another one, reversal. And this occurs over and over and over again. But because there are some rules built into it, you have to wait for a level to be taken out. that sort of liquidity sweep that you're looking for, break of price structure. There's quite a few things that need to fall in place before you execute. And generally, when they do fall in place, you quite often sit with a very high probability trade setup. But they don't always line up. This is the thing. You can have a low of the day, price just reverses up. That happened last week quite a few times. And just get a one directional move, boom, and price never moves back to a fair value gap. So yeah, there are some intricacies involved in trading this. But will this potentially be the low of the day? Will price just heading back up to take out the highs of the day? Because if you really look at it, we could probably just say we're still in a range. And this obviously being on a 5-minute chart, guys. So I'm not saying a range on a daily or whatever. Just playing it very, very short term.
And tell me, did you try maybe some other indices, for example?
This will work on the Dow as well. And generally, I believe you could probably go mimic this on, let's say, on the DAX. We could probably do it here in South Africa on the JSE. But there you'll obviously have to look at when does that, in half an hour before the stock market opens for that country, and give yourself like a 2-hour sort of, and it will be in a different time zone if it makes sense. Because it's just when most of the volume comes in, and typically when your big traders go and position themselves for the rest of the day. And quite often, the way I see it, they want to run stops. They want to obviously know this is where everyone's placing the stop losses. If they want to have big block orders that they want to fill, they want to take the opposite trades. And how do they do that? They run stops. Now, whether that is exactly what's happening or not, well, it's the way I see it. A little bit of market manipulation for a short period of time before they position themselves for the rest of the day.
Yes, we have the same time in the UK session. So, but that's 2 hours that you watch. It's from the beginning of the stock market open and 2 hours after that. Is that not true?
Yeah. So it's just basically when most of the activity starts, most of the volume creeps into the markets.
Yes.
So you can follow the same. I probably should go have a look tomorrow in a bit of spare time, see what the FTSE does, that sort of stuff. If there's some sort of, because not everyone can trade during these hours. That's the other thing. But it just so happens I like trading during these hours. It suits me. And I only go and trade for those 2 hours. Look for setups. It keeps me disciplined, keeps me focused.
Yeah.
And if I don't get a setup, I walk away.
Yeah, that's what your job as a trader is. Have a plan of attack, and if it doesn't follow through, just sit on your hands and wait for the next opportunity. You don't have to force a trade.
Yes.
Sometimes the best thing is just sit on your hands, like we did today.
Yeah.
I mean, I didn't take a trade. Obviously Richard did, but I didn't take a trade. So I mean,
Yes.
look, the
Lift
market
chance another
stopped out here now, but I really reduced my risk. There was a nice move in my favor. So be it. And now it's just basically a bit more of a relaxed type of trade. Not taking a huge sort of trade here either, because of the conditions. This occurred after the 10 a.m. mark. So there was no news standing in my way here. It reached the levels I wanted to trade. Things worked out according to what I planned for. And now I'm still in the trade. Like I said, if I get out, my stop gets taken out, at least I followed my thinking, my rules, and my planning, which is what potentially 99% of the other traders don't do. They just like willy-nilly go get into trades and those sort of things. So at least a lot of these rules that I built into this keeps me in check, and I'm comfortable with that, if that makes sense.
yeah, a bunch of things. It's not just one criteria that makes your whole decision. It's a multitude of things coming together and giving you a clear picture. That's always the best way to go. Trading isn't that simple. It's very complex. You got to have you got to know exactly why, and you got to have multiple reasons supporting your decision.
Exactly.
Yeah. And I think that beginner traders, they start with the simple rules, and that during the years and months they add additional triggers one by one, and one moment they finish their strategy and their point of view, and it's I think the best strategy for everything.
Yeah, there's always one extra thing to mess around with the overall thing. And what people do then is like, they back test it with a certain amount of rules. Now they added something else. Then
Yeah.
I don't factor in that that's not going to, like, it's going to mess around with your back testing.
Yes.
I've been there, done that. Excel sheets, thousands of them.
Yes.
Yeah. I like to try to keep it as simple as possible. I used to start with a lot of indicators. Like you see here, mostly is price action based. Waiting for the futures that Holoprime is going to launch hopefully soon. And then probably going to work in a little bit more stuff like your volume profile and that sort of stuff into the strategy as well, which can also be helpful.
Yes. So, guys, this is it. I think that we are the end of our journey today.
We are.
Yep.
So, I wish you a great day
Well,
today. Just to say
thank you very much, Igor. And Nandan, was nice meeting you. Hopefully we can see you again in a session.
me
Yeah.
too.
Yeah,
Me too.
likewise. Hope to see you guys soon.
Awesome.
Thank you.
Our
Perfect.
pleasure.
Cheers, lads. Have a good one.
Okay. Bye bye.
Bye.
Bye bye. Bye bye.
Hey.
Hey guys.
Hello.
Oh,
How's it going?
what's going?
How you doing, Michael? Long time no see.
Yeah, I'm doing awesome. What about you? So you got some new headphones?
No, it's the same ones. I
We just figured you'd bought some.
nearly said I just watched them, but I didn't. No, it's the same ones. It's the same ones. Yeah, it will be interesting to get your take on the last 2 weeks, 3 weeks.
I thought you were going to say
in-
wired headphones.
Yeah. No, specifically the markets. Like it's been, basically where we left off yesterday in the session, not a lot has happened. We're pretty much trading at exactly the same levels. What's your take, Michael, on the last 3 weeks? How did you find the last 3 weeks?
Oh man, it has been interesting to say the least, right? Like Friday, I was flat. I don't like to take trades on the last Friday of the month. Monday, I didn't do anything. I don't like to take trades on the last day of the month. And then today's a U.S. holiday, so I was super cautious today too.
Yeah.
But checking out the last few weeks, let me share my screen here.
Oh, I'm gonna have to stop mine first. Let me just stop. Sorry, carry on.
Oh, no worries. Yes, I agree. It's been kind of minus the S&P and NAS and like the indices. It's been super interesting to say the least because it's a lot of ranging, like tons and tons and tons, right? I'll get to this one here in a second. But mainly just getting to GU, right? GU. Okay, so cool. So yeah, GU for me, like even for like the past few days, has been kind of funky here, right? I don't like this range at all. It's just sitting in this same little area, right? From here to pretty much here, just kind of hanging out for like the last.
Yeah, it's doing nothing. It's doing nothing.
Yeah. So I don't like that at all, right? And then here, like typically you guys would know I would have my 1350 cross, so I'll be looking for shorts, looking for some type of, once we got this M structure here at the top, right? Got this cross, want to see some come down, not in a range, hit the 50 and kind of drop off like that, right? More of a move like that, but this is hideous. Like this is, we're going on like 10 days, I want to say, just hanging out right here. So super ugly. I haven't been interested in GU in a minute, right? I know I said I wanted it to turn around, but I didn't want it to turn around in range.
Yeah. Yeah, well, the range is longer if you count if you look on the daily time frame. If you count that range from the low to the high, it's been, I'm pretty sure this is the 4th week now. We are now entering the 4th week of just doesn't want to get out of that range. So yeah, it's
hideous.
Not great times to be a trader at the moment if you're trading the pound US dollar.
Now, I will say GJ last night kind of did something a little bit different, right? Now, for me, this actually would have been a setup, but I'm not up in 1 o'clock in the morning. So this was a pass for me. But similarly, as you guys always know, this is an ugly M structure, like not even a real full M. And I don't really like it when it touches the 200 like this. So it went past it, as you guys can see.
Yeah.
Right. So we had our 1350 cross here. Once this touches the 200, it's dead. So they did a sneaky move, right, where they did my same pattern, right, and hit it here, right? This move is actually this move here. They just hit the 200 and sneakily did it. But this is ugly also for me because there's not too much room to run, which as you see, it bounced right off this 800 EMA here. So even if you would have taken this setup, right, you would have ended up taking it, let's say here, because this is where this closed. I mean, this is not good at all, right? Like you'd have been risking $1 to make 50 cents. Ugly. Let's say you've been waiting for the pullback, right? You would have had to wait for this pullback all the way over here just to get in. And yeah, it would have got you in then, but just too risky with this tight area. So I wasn't interested in this either. Yeah, not too pretty. I've been cash for like the past 3 days. Yeah,
the Forex. I don't know. I'm not aware of any Forex pairs that's actually trending at the moment, or I'm not sure if you. I don't look at all of them, so I don't really know. I just mainly focus on the pound US dollar.
Yeah.
But okay, I'll just quickly go through Paul, if you don't mind.
No, chill Tuesday. Let's go for it. You know,
All right.
I always got stuff to fill the time, so just you guys exhaust yourselves, and then when you're on, take over.
You fill in the gaps. Okay, great. Well, I'll just have a look at. Let's start with the NASDAQ. Okay, so this was the intraday. I mean, it opened. This is the market open. It's been very indecisive here in the open, and then we went to the pivot point. I didn't look for an entry there because, as you know,
we can't see your screen.
Oh,
the screen didn't come up.
But at least you could see my expression. I was very serious.
I wasn't mentioning in my
Right. Yeah, we were trying to reach the PA for your facial expressions, but it wasn't doing it.
I was very serious about what I was saying. So, but anyway, it went to the pivot point here. I was bullish for the day because of I got my bullish bias on the daily here. You can see that we went after those two really strong sell-off days, coming back down below the 200 EMA. We've got that little, not that strong of a sell day, but still a down day. And then we bounced off the support level, and that's a pretty nice little hammer. So I was bullish for the day. It's not always that you get a clear bias on the daily, but when you do want to trade in the same direction. But on the smaller time frames, I just the pivot point was clear. But for me, I have to get 2 out of the 3 candles, at least giving me a bullish confirmation. And it kind of, like it started really here when, at the close of the half an hour and the 1 hour. So for an entry now, remember on the 1 minute time frame, I need to find an entry that makes sense. In other words, it needs to bounce off like a support level over here, or break through out of a resistance and retest it, or a 1 standard deviation. It needs to give me a solid entry. It needs to make sense. I can't just chase it. I can't just enter here. Right. This has happened more than once now lately, where especially this really strong down there here. It just moved straight from the open, very strong, no pullbacks, just kept going. And on those days like that, I just get nothing, and I'm pretty sure that was exactly the case here. But the thing is, they don't happen most of the time. If that was happening most of the time, I'll adjust my strategy, and say, okay, right, all these trades are running away from me. What I'm doing is not working. But that's not the case. It's just like, right, but that will happen occasionally, but.
And that's part of it, right? Like I have something similar to where, if it pulls down too far, I'll take a piece of it, like a small position, and then I'll put my other half, like once it pulls back to like a decent level that I get a better entry on. But sometimes there is no pullback, right? And then I'll be missing the other half of my move because I only got half my position on.
Exactly right.
So I totally.
Yeah, because the thing is, like when you do like just take those breakouts, I just know from my stats that you will just too many false breakouts, right? Things like that. It just doesn't. It makes more sense to just wait for that pullback, and if it just runs away, then so be it. Then you just kind of sit on the sidelines. Yep. So not too much on the NASDAQ, other than it will be interesting to see what happens from this point. Are we going to start to range? This is a pretty wide range. I don't know. It's very difficult to tell from this point. All I can see is that we are hitting a support level and we're moving away from it. But I'm not bullish in any way, shape, or form. I still think this will go lower. So it will be interesting to see what's going to happen here. Is it going to go back to the 200 EMA again? I don't know. But for the short term, I'm definitely bullish on the scalping side of things. So yeah, that is the NASI. And then if we just look at the pound US dollar, We're pretty much where we were yesterday. We're pretty much where we were. If you look at the daily time frame, it's like a doji, right? And this is what I'm saying. Like if you count these, this is the low of the range on the daily, and that's obviously the high. So it's been, yeah, it's just. I suppose you could like trade really small risk reward ratio trades on the smaller time frames, but it has to be off key levels. And for me, it hasn't really hit any key levels. It's, a key level would be over here, perhaps, right? Ooh, it's a bit,
Right.
So it's not. I'm just waiting, as I said yesterday. I'm waiting for this to pull down. Ideally, an ideal level would be this 1.27251 area. I'm not sure if we will get it. I've actually identified a level earlier today that happened over here. I'm not sure if you can see this. You see that?
Mm-hmm.
Yeah. That's also a support area worth just checking. If it goes below the 38.2, there's 1.28 level. 1.28, more or less flat. 1.28, and then just below that, which is the 1.27860. So we'll see. That's if it does pull back in the range. If it just goes up and it breaks to the upside, then obviously all of this falls away, and then we'll try to. Then the bias will definitely be long. But for now, for as long as we're in this range, I would like to see these levels. But if there's no price action, I'm going to sound like I'm on repeat to say the same stuff I said yesterday. Like it was like literally a doji on the day. Well, maybe a little bit higher than the open, and there's still time left, so we'll see what happens for the rest of the day. But so far, I would say we can probably expect this to continue. I'm not really sure what news event can possibly, or what are people waiting for? Are they waiting for NFP or what?
Yeah, it's ridiculous. Yeah, maybe they are waiting for NFP on Friday because it's definitely just hanging out. It's like like the market makers haven't come to work or something.
When you've got news at the back end of the week, I mean, it's typical, right? It's just everyone just sits. What's going to happen? What are they going to announce? A new dollar bill. It's going to be amazing. It's going to be gold.
Yeah. But you see, the thing is, it's not. We've had several news events over the last 3 weeks. We had this is part of the range. This was NFP, FOMC. Part of the range. We had core CPI here somewhere as well. So we had some really big news events in this, that all forms part of this range. So it's a very like a unique kind of range that we find ourselves in here. We've just been stuck here for so long. I mean, this range arguably started like if you draw those levels here. What's this? This is the 6th of March.
I mean, it's just like the news events. Any glimmer of positive news, whether it's an easing of sanctions, they're just keeping us afloat. They're not rescuing us from the ocean. We're still just treading water, right? We're not dead, but that's kind of what that looks like to me, because it's like any other day. Like you get a winning lottery ticket any other time, and you'll be like, "Yay, this is fantastic!" But in the current environment, it just means nothing, just absolutely nothing. And this is the problem, like, because we know what's coming. We know that if this continues, the data is going to get worse and worse and worse and worse. And then, of course, I mean, it looks like it looks like it's slowly rolling over. So
yeah. Oh, you're right. So Andre, Janine, that's a new one. You can call me Janine, Andre. I don't mind.
Was he referring to you? I was just searching the web to find out who is this Janine in the Fed. Right?
Yeah, with a name like that, I'm expecting expensive gifts, Andre. You're gonna call me Janine.
Jannie, you were scheduled to meet with Jerome Powell yesterday. I'm confused.
Oh. Yeah. Oh, sorry. Sorry, Andre. Nice to see you again, man.
Yeah, it's great to see you.
How did your trade go yesterday? Because I had a look at the trade you placed, and your timing was pretty good. I assume that was a bit of a scalp. think this is where you got in. You got in right here. So you caught a nice little move there. Sorry. Yeah, but anyway, where were we? Oh yeah, I've been sitting in the same chair all the time. Let's go to the Bitcoin chart. That's all I have to say about the pound US dollar. We just need to get out of that range. You just need to get out of that range and then find some direction, and we're just not getting it. If we get a very weak non-NFP on Friday, then I'm like, oh, I just wouldn't know what to make of that. Because then that's like quite a number of big news events, just like hardly any reaction. So I'm not really sure what we're going to wait for then. I suppose then you just got to have to wait and look at price action, right? And just see, watch it and see if there's any movement. Are we going to break out of it or what? We will break out of it eventually. But anyway, so that's the pound US dollar. Sorry, that's someone else. Yeah, Andre, sorry, man. I need to read the whole message before I say my name is not Janine. That's my fault. All right. So Bitcoin yesterday we were trading right here, and I think we Paul we both agreed that this was a pretty good spot for Bitcoin to go up.
Yeah, that little pocket. Yeah.
Into that little pocket. Now I have adjusted this line so that it lines up with this. That's why it makes a little bit of a taper towards the top end, but it just it touches the lines a little bit better now. And then I've got this horizontal line. You'll see it's called range breakout. So that's the range breakout. Okay, so that is where it's going to start to get interesting. Okay, we want to see price rejecting from there, and if it does, then we could potentially start to look for shorts. Okay, but it is playing out. Now, I just want to show, like, how would you play this if you see, because like yesterday when we were in the session, it was literally this candle here. And it was like, okay, where Bitcoin is right now, this is actually a good spot for to go long. But it's very difficult to, if you see something on the 4-hour time frame, in this example, obviously this is like a little, these are smaller trades. They're not big move trades. So you see this, because this is a resistance area right there. So where would you enter here?
I wouldn't.
And for not on this time frame, but you can go to smaller time frames if that's your game. Otherwise, you can just leave it. I didn't take this trade but I could see. I'll just show you. If you go to the smaller time frame, so this is where we were yesterday. Okay, so this move here. This is a pretty. Whenever you see a pretty steep move like that, I know you can argue that was a steep drop here, but it recovered so quickly you can count it as part of the steep climb there. And it starts to come down, then what I do is, there's only two things you can use here. And that is to look at your pivots. That's the one. And there's only one here. That's the only one in this steep little climb. So that's not a lot, but that's one thing you can use. And then the second thing is your Fibonacci levels. That's probably the best one for steep climbs. And it came down to the 61.8 quite beautifully. And so you can, if that's your game, I mean, but this happened overnight. I'm pretty sure this was like, it was 1:30 in the morning. So there's no way I would have caught this. But that is like, if you go to smaller time frames, like even if you spot something on the weekly or the daily, then you'll typically go to the 1 hour, 2 hour, 4 hour time frame and try to find your entries there. Now, your target would not necessarily be right at the top that we saw there. It will probably be just this previous high here. I prefer to record these trades, but if they happen like at 1:30 in the morning, it makes it a bit difficult. But anyway, I think most people watching this are probably in bed by the time something like this plays out. But anyway, it's just to point out, when you do see something like that it has the potential, or it's definitely at a very good spot for this to move higher. it's very difficult to find your entry right here because the price action is a little bit messy, but you can find better entries on smaller time. Not always, but in that case, there was a very clear, steep incline price action. And then if that's the case and it starts to pull back, then you can start to draw your flip levels and aim for the 50 or the 61.8. If you can get the 61.8, that is a very strong level. But the 50, sometimes it bounces off the 50. So anyway, yeah, so that's Bitcoin at the moment. It is moving up and we are approaching. I think there's a lot of this is a pretty strong candle. So I think we can definitely see the retest of this breakout level. Yeah. I don't know what your thoughts are on this, Paul.
Yeah, I'll jump in. I'll jump in a sec. I mean, one of my students traded that short breakdown quite capably. That was the last real probably trade from Bitcoin, just that short trade. But yeah, I mean, I've got quite a few stats we can talk about today. But I mean, I'm not entering a long trade there. Simply on the basic principle, we're just below resistance, right? And obviously, even if you're doing a shorter term trade, it's right today. The whales are playing games, right? The price action, they're just playing games today. And we need. All we need to do is we need to wait to see how it responds to the horizontal and diagonal trend lines, the primary trend lines, and then we'll go from there. If it gets weak, then we've got a short. That's another short opportunity. But right now, it's a waiting game for sure.
Yeah. No, I fully agree. But it's definitely the overall trend is down. So yeah, you're right when you say that taking longs here is not high probability setups, that's for sure. They're not high probability setups. The short trade.
It's like Paul said, it we need to break out of all of this first. This is like this.
Yeah,
is,
it's not.
There's if anyone can make direction out of this, I don't know what they're looking at.
All right. Well, let me jump some of my charts on. Is that all right, Jannie? Yeah, let's jump.
Sure.
Jump into it. Got quite a few things we can look at today, so we can take it in turns. Present. Okay, here we go.
Present.
All right, present.
That's it.
Right, so let's just get back to the granular. Let's just see, look, whales are playing games today. Look at this nonsense, right? So, okay, so this is a different. We're looking at things differently to where you've been looking, Jannie. This is obviously the most relevant chart, I think, maybe today. So obviously, we're talking about where's the next long opportunity. Well, really, if we switch to, it's down here, right? We want it to do this, and then maybe print a lower low, and then this is kind of where we want to start entering. That's the next long opportunity. We need to just come down here. You don't want to be doing it here. We just need to wait and see. And then obviously, if we manage to break out of this pocket, then we've got options for entrances, right? But we're not there yet. So it's a waiting game. There's maybe a short here in this nice little pocket with the 1 day. But if you're going to short this, you want to be shorting at the 1 day 200 MA, right? And if you get confluence with the 0.5 and the diagonal trend line, then perfect. If you don't get that, forget about it, right? Because there's just too much uncertainty. Just so in terms of, this is bonkers, right? This is people trying to front run the bottom, and we're obviously broken out of this pattern against probabilities now. So who knows what's going to happen, right? Because when Bitcoin breaks to the upside out of this has obviously got a 70 to 80% chance of breaking to this side. So when people see this, it's like, okay, what's happening now? So people are going to be looking, some crazy people will be looking to come in here maybe, and then maybe we can have a crazy go from there. That's a little bit insane, but it's until this is crossed, we need to wait and see. But just here's some data just to get you thinking about this move now. And I'll just put it back onto this chart so we can get some perspective. So 12 years ago today, you guys will be interested to know that Bitcoin reached $100 for the first time. $100.
Wow.
At the time, mind-blowingly good, right, for Bitcoin. Who knew? Also, there's a few bits of data point. I didn't have time to do the chart, but so basically, people who have been spending about 3 to 6 million on Bitcoin, so they're kind of like modest modest whale holders, essentially, the spending of these traders has been the lowest level it's been since mid 2021. Now, what that essentially means is that there's a lot of inactivity from those holders, which reinforces the idea that the recent top of about 100 or so K, buyers are still confidently holding their positions rather than exiting them despite recent volatility. So you're having new traders trying to come in and obviously get lower prices, but you've got people who bought at the top. And when we're talking about the top, we're talking about up here. We've got people who kind of entered in this range. They haven't sold, right? They haven't sold yet. And that's obviously quite bullish. Plus the fact that talking about waiting till the end of the week, we've got the US Treasury and other federal agencies are slated to reveal their BTC and crypto holdings on April the 5th. So it's definitely going to be a waiting week. We said this yesterday, but but just to give a bit of perspective on that's just insane. Let's just have a see what's going on. So this is Bitcoin 4 hour. And we were talking about differences between this chart and this primary trend line, which comes all the way back to last summer, compared to this trend line here, which is around 72K, which is the obvious kind of buy-in point following a straightforward retest after this breakout. But the problem is, we were talking about the other day, is that if this trend line breaks to move down to around 73K, that's a bearish signal, which other traders are going to see. And even though this isn't as significant as the other levels, we do need to try and hold this level. And if we zoom in, we simply need to surpass this. We've got to come up, surpass this, and then maybe we're away. So lots of mixed signals at the moment, but the data underneath in terms of whale movements, just an example, USDT issuer Tether reported that they bought almost 9,000 Bitcoin worth $750 billion just in Q1 of this year alone. Right now, if they're like some of those holders which are quite happy to just keep it going until it surpasses it, then Bitcoin's doing fine. But this is kind of where we are. It is a waiting game for sure. We're trying to figure out, is it going to hit the bottom here, which would be logical, but then how do we deal with this trend line then if Bitcoin loses it, right, to get down there, which makes us think that a lot of traders are going to try and front run this area, and maybe we can see a breakout from here, which would make sense because we're at the bottom of this range we've been trading in. This is a bit of a weird kind of point at this bottom, and we come in here and we try and then attack this resistance level from the bottom. But right now, nothing from Bitcoin to really to trade right now until we get this pocket. But just one thing I wanted to show, because I haven't had one of these charts for a while, and you guys can tell me what you think of this. So obviously right now we're all trying to figure out, with all the markets, what's going to happen, what are we going to do, where are we going, when's the pain going to stop, all of that. So this is Bitcoin 1 day, which has got golden Fibonacci's on with the 2-week stock RSI. I think there's a bit of confusion here, but yeah. So basically, this is previous cycles. This is January 2018, and we hit the red line with the cycle top. Bearing in mind, Bitcoin's market cap was a lot smaller back in 2017, right? And then we fast forward to the pandemic. Definitely a muted bull run because of economic headwinds, right? So a bit of similarities where we are now. We hit the purple line, which if you think about, Bitcoin's growing and growing, and then it can put in less and less gains each cycle. That makes sense. Red line, purple line, and are we just going to have the orange line this time? And the orange line represents about 155K, and the purple line represents around 250K, which is more in line with other price charts in terms of where the top might be. But this is quite an interesting chart because obviously the stock on this time frame is super oversold on the weekly. And as you can see, cycle tops obviously coincide with it being oversold. And we've got a lot of leg room, and this primary trend, another diagonal trend line, I think the same one we've just been looking at, the 4 hour, is holding steady. And we could expect a move from here over the next couple of weeks if this trend line holds. And then it's just a case of, are economic headwinds going to mean that this cycle top continues the trend of having lesser gains each cycle, which would be about 150, which would be not really within expectations? Or are we going to hit the purple line again, following the fact that the previous pandemic was a lot of muted the bull run, and it really should have gone up to the red line, and the red line is again 380K. So maybe somewhere around the purple line. But this is just a sort of chart we can get a bit of perspective on. We can zoom right out and we can have a look at, right, this looks quite bullish for Bitcoin at this point. We've just got to have somebody to fire the starting gun, and obviously that requires consistent bullish news, right? And or some easing of the news. But interesting chart in terms of answering the question, where are we and where are we going? I mean, any thoughts on that, guys, from your perspective?
Yeah, that golden Fibonacci paired with 2-week stochastic. I've never seen that indicator before. Is that like different Fibonacci retracement levels, or how does that work exactly?
You want me to get the maths?
No, I've never. Have you seen it, Michael? I've never seen that before.
No, this looks very interesting. It's
so is that like almost like a magnet to specific levels, or like I don't know.
I mean, all of the fib things work in the same way. Now, this is an area which I'm stepping into because my mentor was all into fib spirals and all of that stuff, which just blows your mind, right?
Mm-hmm.
And last week we were talking about time-based fibs as well to plot moves. So it's not something which I would say, like, if you're a Bitcoin investor, this is the chart to follow, because it's just, again, one perspective. This is a perspective. This basic chart, this basic pattern is a perspective, and we put it all together to have an assessment of where we think it's going to go. And obviously, when you're trying to find patterns, if you mess around with the oscillators on different time frames compared to the price action, it can give you some interesting insights. But obviously, when you're looking at the stock, I mean, you look at this movement here, right? You can say, well, that's the end of the bull run there, but no, this is the end of the bull run there, right? This was cleaner. Right, this wasn't as clean, and this might be pretty dirty as well. So it's an insight. It's not. It's going to be difficult to trade in reality. But you could say to yourself as an investor, if it hits this orange line, I'm going to be starting to pay attention, and I want to see what the stock's doing. If the stock's still here, then I'm going to be waiting maybe for the purple line to start exiting my position. And you can approach it that way with other things as well. And there's lots of there's hodler ratios you can look at. I've got multiple charts, but just wanted to offer that perspective.
The way you have it on there, though, I mean, it looks in line, especially like it looks together with the trend line, right? And then the RSI at the bottom, how it's happened to be at the low. That looks interesting, right? Like just from TA strictly, you would think that those would be good buying points. And again,
one thing is for sure.
Not to say that I would buy it right because off of that, right? But in addition to some other stuff, I mean, hey, that's some interesting insight, if you ask me.
And I think it's like, this is, if you scroll back, this is 13. There is a pattern. So this was the green line. This was the red line. This was the purple line. What's this going to be? And then you think about it logically in terms of the bigger Bitcoin gets, obviously the less percentage gains each cycle. That kind of tracks. So it does give us an insight. The only issue is, of course, that this area, 2017, is really when Bitcoin started to go mainstream, right? And that we know that the pandemic bull run was muted for obvious reasons. We definitely feel like it would have hit. This red line is only 90K, right? And we expected from the previous bull run to hit 6 figures. So it's not much of a stretch for it to hit that. And you take into account the pandemic, then you could understand the 10K, 20K reduction in target. So we should still look at the purple line as a logical place this cycle, but and the stock is obviously saying this, we're approaching a good entry point, but if you see here, we just want it to be flat first. So there's still potentially, I'm worried about this trend line, to be honest, and we need to keep
because like you said earlier, if it breaks below it, everyone's going to see that, they're going to hop right on it and think it's short. Like Bitcoin's going back to 50K or something.
It's going back to $100, which it was 12 years ago.
Yeah, there you go. There you go.
So, yeah,
I mean, is that it?
No, I got more.
I was gonna say another good strategy.
Jannie got his popcorn out.
Based on, I just gotta. I listen
I'll
just
keep
put my
talking.
feet up.
I'll keep talking. That's fine.
That's fine. No, what I was gonna say is, like, this chart, right, that you have there, I would say one very good way to keep everybody on the side is to tell them to wait for price to break above the white line. Oh my goodness, that will never happen. Anyway, can I take your chart off now?
Never say never. Yeah. So yeah,
I
I
just
got more,
want-
but that's it for now.
Okay, we're talking about Bitcoin more than anything else today because it's the only market that's actually doing something at the moment. But I just wanted to point out, just to add to everything you've said now, Paul. Can you see my screen?
Not yet.
Oh.
Yeah, it's coming. Got it.
So, what was this line? I've actually named them. Horizontal line. Really? That's
You've
the
named it
name?
horizontal line.
That's like that's I did not know.
It's a
If
very
you don't
clever
name
one.
It's a line.
it,
I don't understand what it is.
if you name, you can name this. So like, if there are many lines, like okay, that's a range breakout. I get that. I can't believe I didn't name this one. Anyway, let me delete this line. But this, I would not be surprised. Well, you shouldn't be surprised. The market is full of surprises. That's why I won't be surprised if this is the actual low before Bitcoin recovers completely and makes a run to the upside. We are, I think I've mentioned yesterday about this level here being a pretty strong support level around this area. Right. Hang on. And then, but yeah, look at this. Ta-da. Came up right at the 61.8 Fibonacci retracement level. I know it's not enough, and I agree with you. We need to break this high of this range. We need to get out of that. But I'm just saying I wouldn't be surprised if this was the actual low before it started to move up. But we are looking bearish still.
No,
The trend is down.
You're changing your tune because you're saying what I was saying like a couple of weeks ago, and me and Michael.
What did you say?
We
No,
were
you-
saying.
Oh,
we were
You
saying
said it was
Oh,
going
yeah?
to 71,000. Yeah, you said it was going to 71K.
we've switched.
Yeah, I did.
I'm now
I
bearish.
I am bearish. I was bearish. I still think we are more in a bearish situation than a bullish situation.
No, but you are right, and I think we're both the points. What I wanted to say when me and Michael were like 2 against you, and I said this is perfect because for people paying attention, you don't just want one or me and Michael's perspective, right? You want Jannie's perspective as well because that's how you get the whole picture. Now,
yeah,
I agree with you based on the charts we've looked at. There is, that coming back down to that 72, 73K range would invalidate a lot of bullish patterns on other time frames. And because Bitcoin does like to kind of front run these things, there's a lot of holders just waiting for it to reverse. I do think that you're right. There's a good chance that if the market improves, the conditions improve, we're going to get a bounce before we get anywhere close to 73K. But you have to look at the fact that we are in a downtrend, we are in that pattern, and until something changes, that's where we're heading. And you have to presume that as a trader, otherwise it's just gambling, right?
Yeah. Look, I mean, just to be clear, that the 73, it's not 71, it's a 73 level, that's the resistance there. And then I think the 61.8, that may have been closer to 71, 72,000. Yeah. It's just a possible scenario that it can very easily go down there, right? What's the argument against that? Not much. If you're in a downtrend on the 4-hour and the 1-hour time frame, and it fails to break out of any resistance levels, it can go here. But at the moment, as we've said several times now over several different sessions, it's just not a good time to do anything. You are waiting for clarity. We want to get some clarity on what's it. Can we get interested in placing a position now or not? And the answer is just no. Okay, it's been no for some time now. Maybe I understand. I think it was piercing through here. This was the level that got. That was that Friday when we had the session together, and I think it was just dropping back to this level. And you were bullish, and it did go up. So you were right. I think we were just not looking at the same time frame because in the short term you were right. I was just thinking, no, I don't. I think just let's hang on a bit because I think it has some work to do. It has to break out of several different resistance areas before we can say, okay, it's game on.
Yeah,
So
I think. I mean, quite simply, I mean, we can see it. We're going to get signals like we have today with that on the 15-minute and the lower time frames, a little bit of a blow off, which is great, right? But it's all
Yeah.
about the 1 day 200 MA. That's it. It's a really simple equation, right? You're going to have people.
It's funny you even brought that up, right? Because when I'm looking at this, let me get into this party, guys. Let me get the screen.
Let's go, Michael in the house.
Let me jump in, right? Because you said exactly right. I was waiting until my turn to kind of bring this up. Bitcoin daily 200, right? This is where this is for me, right? So let's check this out. If we were to scoot this back, right? Very interesting. And let's scoot this all the way back. Right?
Oh, well, hang on, Michael. You're not on stage, brother.
Oh,
no,
I'm not on?
Okay. You're going to have to start from scratch. You're going to have to start from scratch.
So here we are. Sorry. This is Bitcoin's D1, right? So as soon as we get this, right? This, as you guys know, for me, is an uptrend, right? The 5,200 cross to the upside. Now, what's interesting is every time we have some interaction off the 200 EMA, like here, this area, right? This area here, this area here, right? And now we at that same type area, right? This area here. Every time it's done this on the D1, we've been in a nice, it might have hung around for a little bit, but it's definitely going higher. And this has been happening since September of 2023, right? So 18 months, somewhere close to there. I will be looking for, again, I'm still saying the same thing, right? This is nothing right now, but at the end of the day, this is super close to actually doing something, right? I'll be looking for more of a move, nice little hang around here. Once this closes above and gets to, let's say, this price here, which is, what is this? Yeah, like 95. Yeah, I'll admit, at that point, I am fully bullish at that point. Once I get me a nice close above this, and I'll be looking for this to continue to run up, right? And just make new higher highs. So that was really it. All I wanted to throw in here. But yeah, this is right at that cusp, right at that area where this could turn into something. Like, once again, just like it's done for the last, this is the third cycle, like, doing this. Once this 5,200 crosses the upside, 1, 2, 3, always we getting this action, right, off the 200 EMA on the daily chart. So I'm cash now. I'm just stepping to the side. I'm not really doing anything unless it's, short-term moves, which, again, you guys already know I'm only buying Bitcoin. I'm not shorting it. But for the long term, if you're looking to do this, trade this asset long term, yeah, I'll be looking for something just like this. Nice close above here. Even if we got around, yeah, I want to see it get around here. This is 92.5, right? Then this would start looking like, okay, this looks like it's about to go ahead and take off again. And then taking out these highs, right? Minimum 110,000, 109, 110, somewhere around there. Right. As soon as I get this close above here, right? Yeah, let's say I'm going long here. Stops is below. My stops will be below at around 75, 76. Give it a little bit of room. Maybe 70. Yeah, somewhere around 75,000, right? And hey, it's no telling. Yeah. It's no telling when
it's making moves now. It's trying to make some moves now. Yeah, it's really trying to find its feet. I don't quite see it.
But do you guys agree that is interesting, right? Like, kind of how you just said, Paul. Like, every time we get to the 200 on the D1, this is where it's at. We've got it actually hasn't failed yet.
The thing is also, sorry.
Jannie, sorry.
No, I was just going to mention that that little pocket area that we were watching, it's approaching it very, very quickly. Like, pretty much, like, let me Do you mind, Michael, if I just?
Oh yeah. I just wanted to show that really quick anyway. D1.
No, really good
Yeah.
point. No, that's really good.
Let's
It's because these moving averages on the higher time frames, they act as lines in the sand for bullish or bearish premise. And if you've got people holding and you've got big whales playing this game, which they are, right? They don't want it to come down below these moving averages, so they will come in at this to try and keep the bullish context going.
Yeah, even if they have to buy more to keep it at that level, like they're not gonna risk, you know, it breaking that level.
Yeah, I was just saying that this 4 hour candle that we are in now, you can see there's a very big rejection wick to the low end, a little shadow, but it's approaching that pocket pretty quickly, and that is not. I mean, that always makes me a bit nervous to look for a short there, because if it's really strong, you're not trading gradually to that level. Does that make sense?
Yeah.
You don't get these average size ATR candles kind of just plopping along, whatever the word is. This is a very strong candle. When you get a strong candle like that,
well, I think this is Bitcoin, right? I mean, this is a nothing move from Bitcoin. It can go up 20% and crash 30% in the same day. I think the point you're making is an important one. When you're seeing something, it's not walking up to it, right? It's jogging up to it for sure, right? And if you're looking for a short entry and you see that level of momentum coming in, then you need to think about how much confidence do you need. Now you could say, right, okay, if it's just it spent 3 days slowly climbing to the 1 day 200 MA, then all right, if you've got a few other confluences, short it. But if it's coming up with pace, I'm waiting for divergence. I'm waiting for some kind of reversal pattern as well, to offset that potential risk. So it's a really important point. But is Bitcoin, because the whole point is Bitcoin is very capable of just going straight through those barriers as if they're nothing if it decides to, right? So it is a difficult proposition, because if people are trying to scoop up the bottom and front run this reversal, and then you're like, well, it's been really scary, so I'm going to short it, you might miss the move and the change in the weather. So I think caution is warranted for sure, Jannie. Yeah, you're right.
And I just wanted to get your thoughts on, what did you think on this candle?
What day is that?
This was on the 2nd of March, so a month ago.
Let me have a look at my chart. Just keep your chart and let me just have a look for context. Start of the month. Where are we? I mean, that was you could look at that a couple of ways. That was the first break of the 1 day 200 MA, right? That was a response to the first break of the 1 day 200 MA since October 24, right? So that was a liquidity grab, right, which pushed it up, right, for sure, because we had essentially a bear trap. It broke under the 1 day 200 MA, and then a lot of buyers were coming into, front run essentially that bounce, and that's what it was. But then it ran straight into resistance, and then you'll notice, of course, that the sell-off was just almost as strong. So I think that's what happened there. It was the first break of the 200 MA. A lot of people tried to front run it, thinking that there was a bounce, but we couldn't make it through resistance. So that was that, really, I think.
So, but when you do get something like that and it retraces, were you waiting for this to break again before looking for a long position, or what was your position? Yeah.
Yeah, because it was quite a nice move. It had pretty good volume, nothing remarkable but perfectly normal volume. It wasn't pathetic, but because we didn't surpass 94,910, which was essentially the top of that resistance zone, the bullish context immediately disappeared. So if for example, I mean, if I just so we can use your chart, it's fine. So that 100% fib level and the diagonal line, right? If we had blasted through that, right, then we've got more of a bullish context, and more people would have started to try and come in, even if it came back into the pattern. But because we just came up, got rejected, everyone like, nah, and that's why it sold off straight away, right? And then they're waiting to see what happens next. So that's probably the psychology behind that move, essentially. Yeah.
Okay. We actually still Yeah, we obviously still way below that level, but this is no longer a level that you will focus on. This is now created a new scenario with a new candles that's been added to the chart. The sideways consolidation with a breakout lower. So if we can take out that, then that will be good enough. Am I right?
So I missed the last part of your sentence. There's a bit of a problem with the internet. Do you want to just say that again? Sorry, mate.
Oh no, I said like that this price level. We just spoke about that. This is a month ago.
Yeah.
And it had to break this 100% fib level before before the buyers come in.
Yeah.
But obviously a lot of price action has happened since then. And now we are in a position where like, okay, it looks like for now anyway, we're going to get a retracement to at least this breakout resistance or this breakout. Yeah. This level where it broke out. So that resistance level. And hopefully it will go back into this range and then break this level here. And then that would provide you with a bullish context. So that was going to say, okay, now we're looking for longs.
Yeah. Yeah.
So would you still look at this level as a major resistance level? That's my question.
Yes. A bit, it's for sure. Absolutely. It still is. It's just now we don't have a clear shot at it. We've got it looks like the 200 MA on the 1 day is currently approaching. It's going to create some nice confluence with the 0.5 fib level, right? So there's that pocket we're talking about. But if we can get above there, we've still got the 618 to deal with as well, right? So the best hope is a breakout of that diagonal pattern, right out, get above 0.5, just be so close to the 618, the bulls can just push it above. Then we get squeezed between about 88 and 94. And if the bulls can hold it, right, then we can try and blast up into this upper range, right? But right now, I'm seeing a strong move into the pocket, but unless we see a break above it, it's coming back down for sure. But it's that resistance level is so important. It's the range. The range is about 92 to 94, which we've got to surpass. And there's a lot of sellers there. So a lot of work to do.
Okay. So so take a mortgage out and buy. That's the message from Paul today.
Whoa.
No, he didn't say that. He didn't say that.
Whoa.
He didn't say that. Oh, Andre's got a question here. Could the US dollar lose reserve status to Bitcoin? Paul, what do you think? Yeah? You can?
Look, I mean, look at what's happening, right? We've got people talking about, they're just, okay, we'll say the name, Elon Musk and Doge are going around destroying institutions, essentially, right? They are destroying them. And he's talking about, the Federal Reserve and all of that stuff. So Veterans Affairs, USAID, all of that stuff, right? So when you think about these agencies and you think about what they do, the education department in any country you're in, right? And you think about a government which is willing to just dismantle things which are fundamental for people's well-being, whether it's foreign aid or whatever, right? Okay. Mm-hmm. Bearing in mind that just the closure of USAID in itself has cost the lives of hundreds and hundreds of children, right? This is just a fact, right? Now, if those people you're trying to suggest like they won't do it because, well, that's a false premise because they've proven that they're willing to do anything. And obviously it would be very interesting news to have, Bitcoin not just being a part of a strategic reserve, but perhaps working in parallel as a pairing with the dollar reserve, starting to offset it over time, over the next 10, 20 years. That would be great. And I think, therefore, if you look at it that way, it's very possible, because where is the dollar going to be, right? This is more Jannie and Michael's field, but where is the dollar going to be in 10 years if this administration gets its way, right? And the rest of the world gets its way, which is actively trying to be not be so reliant on the dollar, right? You have a world which is trying to move away from the dollar. Now you've got Europe trying to move away from the dollar, Canada, everybody's trying to move away from the dollar because of everything which is going on. So the short answer is, I think it's a possibility. Is it going to be a functional thing if it's done over the next 2 or 3 years? No, it's going to be chaos. But if we do it slowly, if it's handled properly, like gold in Fort Knox, then sure, it's good. Yeah, I mean, this is the future. Crypto's the future. It's digital money. That's what we're trying to get, right? It's all cool, right? But I mean, controversial questions, I think it's the questions which are controversial because up until the last couple of years, we couldn't even fathom asking those questions because it seems so ridiculous, right?
Right. It's true. It's like, I mean, in a weird, strange way, right? This is just people are, when I say people, I mean companies are tired of being bullied around. It's like, you know what? I'm sure we all seen Space Jam, right? The movie Space Jam.
No.
You remember at the very end when it was like, why do you take it from this guy? He's like, because he's bigger. And they get to thinking about it like, wait, he's not bigger than us, especially if we all band together. Like, they're like, hold on a second. We're right there. We're right there at that moment right now, right? They didn't muster up the courage.
I didn't see the sequel. I haven't seen Space Jam 2.
I've seen it, but I don't remember. I know he had LeBron James in it. That's all I know. Yeah. But no, just getting to touching back to it, it's like people are kind of, I mean, the internet, the world is changing to a point where people are waking up on so many different levels, right? And crypto and currencies is just, and government officials and politics is just so much going on. But people are realizing that I think we can do this without the dollar, right? Especially we got this guy with his administration just bullying people around. Like, look, now you can't be picking on my friends and affecting my well-being. Like, it's a whole nother story. So it's a case of when you're sick and tired of being sick and tired, something has to change. And we're like right on the precipice of something could possibly change. And that could be it. Because people are pissed off about this, right? 401ks are in the tank. Groceries and stuff is super high. You got people fighting over stuff. It's nuts. And like you just said, Paul, a few years ago, we couldn't even fathom that this would even be something that could possibly be, happening, right?
Yeah, and this is the problem, right? Because you're looking at I hate to focus on the United States, but obviously that's the focus right now. It's just because it's just for everything, wars, everything. It's all about the United States. And you look at like, okay, so how do we get calm? How do we get whatever's happening to stop and just like, you know what, Mr. President, if you want to go and release a ridiculous statement, that's fine. You want to draw a Sharpie on a hurricane map, that's fine. You want to tell people to inject bleach, that's fine. But could you please stop with the trade wars, right? Could you just stop? And then you're going to ask yourself, who is going to make that stop? We've got 2 years till the midterm elections. And even though we're looking at all these town hall meetings where everyday people are very cross about all of it after just a few months, we've still got 2 years to wait until we can get a stopgap in place to put the brakes on all of this, because we've got a Republican-held Congress, right? So it's like the frustration, the damage, the lack of interest rate cuts, all of these things, we've got a year and a half of turmoil to go at the very least. And it's like, how do we trade it? How do we negotiate it? Because I was speaking to one of my students today, and his next lesson is going to focus on essentially how do you assess what the next move is from the market? So if we say now this week we're in range trading, what's next week going to be? What's your strategy? So you can, like tornado chasers, they look into the sky and they know what's coming and from what direction, right? And that's what we as traders use to essentially know when to trade, when not to trade. But in this environment, in this controversial environment, as Andre said, it's like we don't have any historical precedent to go by, to trade by. So the advice which you guys have been saying, which is just focus on the price action because that is reflective of what is happening in the world, is probably the most sound advice we can give anybody right now, because we can't make sense of it, right? I mean,
if you're a fundamental trader, this is probably one of the hardest things, because one tweet could change your whole opinion.
Yeah.
Sure. I agree with that. Andre, you also asked the question, if pound US dollar breaks 1.287, can it go to 1.2 1.278. Yeah, I think that's the 50. The answer is yes. I'm gonna go with yes.
And it's good to have. It's nice to have a definitive answer somewhere in this.
The answer is definitely no. The answer is definitely yes, because then that would mean you're breaking out of this range to the low side first of all, and that level there, 1.28 or 1.278. Okay, 1.28 first of all is a level that is on the 4-hour chart, that high there. Okay, so that's a support level. That's definitely a level worth looking at. It's called the horizontal level, so you can just make a note of that. And then just below that, you've got the 50%.
The horizon line.
The horizon line. The horizon line. And below that is the 50. The 50 is also significant, but really, it just depends on how price behaves at those levels. So if you do get the price action to confirm yes, and is breaking, say, a resistance level on a smaller time frame like the 1 hour or the 4 hour, then then you know that's the level where it's likely to turn. But I think I've mentioned this yesterday, a really, really good level, and I'm not sure if we will get there, but this would be a very good level, and that's the 61.8 for retracement level, because you also get this this breakout level. You see that breakout level? That would be a very good level to go to. That's a 1.27251. That's a bit low. I know. A lot of people will look at that and say, no, the structure is completely broken. It's not. It's at a 61.8. Strong support level.
Yeah.
So I'm not sure if that answers your question, Andre, but if not, yes. The answer is yes. It can go to... Yeah. It can definitely go to 1. That's if it breaks below this range, obviously. Okay, we I don't know, like we've said, we don't know how long we're going to be stuck in this range for. And is it going to go up and break to the upside or first come lower? Don't know. But it is trading at a 61.8 flip level on, was it on the daily? Yes, it was on the daily, but not that chart. I don't know where the other one is. Yeah, did I delete it? I'm just going to draw it over here. Pay attention. And look at this. There's the high. There's the low. That's the 61.8. You see that? The range is right on the 61.8 there. And if you just draw a line to go up even further back, it is a pretty significant resistance area as well.
Yeah.
So we broke out there, right? And now it's coming back in. Sorry?
It's definitely decision zone though, right? That the price action.
Yeah, definitely, yeah. And this neckline, I'm not sure, because this is a really strong resistance area. So it's just indecision. I don't know. So we just again have to wait for price action to tell us. So this is just, again, it's a waiting game. You have to get back to these levels to get really good buy opportunities. Or if it just breaks out, then you'll just play it that way. But if it breaks down, you've got your levels, your different scenarios that can play out. I do think the 1.28 is definitely a strong level. And then this 50%, which is even lower, obviously, 1.278. And then, but the ultimate price would be the 61.8 retracement level.
Yeah.
That would be the ultimate.
Nice confluence with that. What is that? An outdoor pool?
Yes.
What is it? Like a hill? A puddle? What is it? That white line. Is it
it's a jacuzzi. It's a jacuzzi.
Right.
Jacuzzi.
Yeah.
This is the foam. This is the foam of the jacuzzi. I thought that would be obvious, Paul. I tried to make things as simple as possible for you to understand. You're not getting it, Paul.
Hey, you chart how you want to chart, bro. It's fine.
Okay, so yeah, Andre, yes. He says yes. Oh, okay. All right. So, Michael, I'm not sure if you want to have you done your G? Okay, you've done GU, G, J, and
yeah.
What else?
Yeah,
what
I only
G
had
do you look at?
Nothing. I mean, I look at them all, but I'm not really interested in anything else except EU. I'm actually loving EU.
Yeah. Let's have a look at EU.
Mm-hmm. Yeah. I'm loving EU. Right. So check this out. Whoops, almost cursed. Check this out.
What were you
that's how a Forex trader tells his girlfriend he loves it. I love EU. I love EU.
Yeah, you make sure you check this one out, right? because this right here.
Hang on,
this
Michael. Hang on. Sorry, Michael. There we go. Sorry, I had to just add your chart.
No worries. Can you guys see my screen now?
Yes, thank you.
Yeah, okay. Yeah, this will do it. This is, for me, is a Mona Lisa. Now, the only thing that's different about this is this a 4-hour chart. So it's a long way away, and I would need a daily close. So I want to see this close below here today, and then I'll be interested in this tomorrow. But this is going to make, this is one of my Mona Lisas. Like, if it's beautiful, 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 like textbook like this, just gorgeous. Just gorgeous. Right? So you guys know I always got to make this right. But just check this out. If this does not look the same, I don't know what does. Let me scoot this over. So I can scoot this over. Right? This is gorgeous, guys. And when I tell you there's a 100% chance that if this sets up, I'm going to smash this trade. There's a 100% chance. There's not going to be a chance that I don't take this if this sets up. Right?
That's the euro dollar. Okay.
Yep. Check this out. Remember, I always say you got the M top, right? You got the 1350 cross here, right? Let me mark this up. You got the 1350 cross, so I can tell I'm in level 1, right? It price did not touch the 200. As I always say, when it does this and it runs, I don't want it to touch the 200 because I want to be in the trade when it goes to the 200 the first time, not the second time. So check on this. It missed it. It did not run past it and touch the 200. I'm looking for this move right here. Run down, right? Once the 1350 cross, I'm looking for the first time price touches the 50 EMA, which is right here. It's playing around. Now I caught this yesterday when I said some would beg to differ and say, hey, why didn't you take the trade right there? And you can't take the trade right there. I'm going to point this out to Sam. It's going to be so funny. You can't take this because if you look at the TDI, you see they're outside the band right here. So to me, that signifies that they're going to come back for one more pass, which they did, right? So they closed below, but you can't take it yet because on the TDI, you see you got outside the band. The way it goes is it's outside the band, inside the band. Look how this goes. You got outside the band over here, right? And then you got this next leg over here is inside this Bollinger Band, right? So outside the band, inside the band here. And I'm looking for, look at this beautiful M structure even on a TDI. This is gorgeous. Like if you were rating trades on like, if they would look like chicks, this is a dime setup right here.
Yeah.
Right? This is a dime. All right. So the next move is, as you can see, the only thing we're waiting on is for this to be a close. I'm waiting for a close. Now, mind you, on a 1 hour chart, when I have my, because again, it's always, where am I? Right. Pattern. Yep. You already know.
That's the first question I ask when I wake up in the morning.
Yep.
Where am I?
Yep.
Turns out it's the same spot. Yeah.
Right. So as always, typically on a 1 hour chart, I have to kick it up to the 4 hour, right? To see if I have my, because so we know where we are. We're in level 1. We got the pattern, right? We got this beautiful, beautiful pattern off this 50 EMA here. The higher time frame confirmation is what we're looking for. Now, since we are in the 4 hour chart, we actually have to kick this up to the daily, right? And we need a close below the 13 on the daily chart here now. So I'm waiting for this for price to close today. I want this to be below this 13 EMA where even if it closes where it is right now, it will qualify. It will count. So I'm still waiting. I'm being patient, right? But I would want to see this close below the 13 so I can get my higher time frame confirmation. And then lastly, right, that's really it. That's the last thing I'm really waiting on for this. Now, I would want to see, I won't want to take it all the way down here, even though If I took this all the way down here, this is still giving me a 1 for 1.3, which is gorgeous. That's still enough for me. As long as it's a 1 for 1, I'm good. But I would love for this to close below. And then I want to take this somewhere up here, right? Somewhere pretty much exactly where it is right now. I would even take the 2.5, right?
Yeah.
Even what it is right now. Put my stops below this swing over here, the most recent swing. No need to put it all the way up here. That's a little too far, right? I don't have to put it all the way up here, all right? I can put it above this second leg over here. My TP, as I always says, is the 200. It's the 200 EMA. That's exactly where it is. That's why I wanted price to miss the 200 EMA right here. Oh, whoops. I wanted to miss it over here because I wanted to ride the first time. I want to take this ride from here to the 200. That's my play. That's the ride. This is going to be my trade of the week. I'm telling you.
That's your Uber. Right. That's your Uber. Yeah. But I just wanted to ask a question. When you get back to that level on the way to the 200 EMA, don't you get a bit nervous because you know you at the same time approaching a support level, or is it based on your stats that it most of the time it does go to the 200 EMA? It does break.
That's a great question. And most of my stats, it does. So you know what's happening? Once this confirms, they're scaring people out. And I want the break and I want the retest. I want them to break below this level right here. And I want them to come back and retest it. Right? Because two things happen. They retest that level to knock traders out who move their stops to break even too fast, for one. And then also they activate those orders for traders that's going long. They finna provide me the liquidity I need for this to really go in the direction I want it to, basically.
Okay.
So yeah, I want it to come back here. Like I would put some position on right when it closes, but I want it to come back here and touch all of this.
Okay. Well, thank you for answering that. And I've asked the wrong question. I'm talking about the take profit level. Oh. But I wanted to ask that question anyway. So, thanks.
Okay.
Thank you for that. But now the next question,
when it
comes down and especially going in,
I enter it and they get to the 200 EMA, I'm pretty much taking my position off at this point, right? Like I'm not interested in it going much further. It's kind of like how we mentioned the ATR. This, in a way, is that max, right? Like once price gets all the way down here, right? Let's say it closes and it just does something like this and it ends up touching this 200. The chance of it bouncing back up is pretty high. Now it could bounce up and flip back and turn back over. That's fine. I don't care about anything that happens below the 200 EMA. I just want to take the move from here to here. All of this is in here is me. I'm finna carve out my piece of the pie right here.
That's another great answer. But the actual question, is like when it goes down on the way to your take profit, your profit target is the 200 EMA. So the question is, it missed the 200 EMA the first time, right?
Uh-huh.
So the question is, don't you get a bit nervous when you get your entry, you are in profit, but now you're approaching that previous low, which is a support level, right?
Let's say around right here.
Yeah. So the question is like, do you get some trades that just kind of it finds support there and it just doesn't give you your 200 EMA and then just bounces off from there, or do you find with your strategy that the probability is high most of the time for it to actually go to the 200 EMA?
So it for the most part, it will, I can't say definitely, but get to the 200 EMA for sure. But for me, by the time it gets down here, I've already taken partials off. I'm at break even. I kind of don't care what it does after that. I protected my capital. I've made some money off this setup. I follow my process. If it doesn't reach this last little, I don't know, let's say, what is this? 20 pips? I don't care. I do not care at all.
Yeah. Okay, but that makes sense because that would definitely, I would get nervous at that if I didn't take anything off,
Yeah.
I was just leaving everything open. Like, any
so
sign
I would
of
take
some
off,
like,
it around right here, right? This ADR low. This is what I always mention. This orange dotted lines. This is the ADR low. So as soon as it gets to there, I'm taking something off. As it goes here, I'm going to move my TP further in profit to here, right? As it continues to go, I'm sorry, my stop loss further into profit. As it continues to go, I'm just trailing my stop. But my ultimate goal, I'm going to take all of this off once it touches the 200. Because this could do anything at this point. As we all know, this is a huge support level at this price. And I don't want to be in this that much longer than that.
Yeah. Good setup.
Yeah, this is going to be gorgeous. We're going to talk about this later this week or next week. When I see y'all, if this sets up, I can't say this is guaranteed to work, obviously. I would never say that. But this is my highest probability setup, guys. Like, this will work. This has everything it needs right now, minus the D1 confirmation. So as soon as this closes below this right here, which it already is, as long as this closes below, I'm taking this setup. And this is going to end up slowly but surely making its way all the way down, making its way downtown to the 200 EMA.
This is good because I mean it's going to be a bit of a slow week, so it'd be good to have some action, Michael. I look forward to seeing how this plays out.
It would also be interesting to see if the pound US dollar is going to follow course, because they're very much correlated, aren't they?
For sure.
But I don't look at what is the just out of curiosity, is the euro dollar also in a similar range? Not really, right?
Nah, this one for me,
it's also at a key level.
Yeah, and it's more or less it broke that area, right? Because I would say that area would be right here, and this is exactly where this area is bouncing off of.
Yeah.
So that break and that retest, sure, that's me all day, every day. Every time this happens, I have to take this setup, like no matter what, and I have to put my full position on it.
Yeah.
Like if I don't put my full position on this setup, I broke my trading plan. That's how confident I am in this setup.
All right. Well, I trust you for sure. I trust
you. All right. Well, because the euro dollar, I'll just show what the euro dollar looks like on the daily chart for.
Yeah. I'm glad you brought that up because I almost forgot. We almost got into a politics conversation.
You mean
about to avoid it, right?
Guys, there's no need to talk about the politics. It's very obvious. The US is going to lose the superpower status, and China's going to take over, and that's all you need to talk about. Okay, so let me just add this. Okay. Ray Dalio's got a very good book, and obviously I can't remember the title now. He's talking about cycles, like really long cycles.
Yeah, I know what you're talking about. It's like a 30-minute YouTube video about it too.
Ray Dalio, and he was explaining that we are in exactly at the end stages of this particular empire cycle. It's just an empire is basically falling. We can get into all the nitty-gritty details, but it's no point. Like the US is definitely losing power. It's just how it is. Okay, so this is the
foot.
so no, there's a lot of issues, I know. Okay, so this is the euro dollar on the daily. So this is the resistance area I was talking about. Okay, and is a support area on both ends. So it's finding support there. So it's not exactly the same range that we're seeing on the pound US dollar. The pound US dollar is in a much tighter range, I'd say. Not this wide, but it would be very interesting to see what happens from this point. It definitely looks a bit more bearish than bullish. Would you agree with that?
Yeah, for sure. It can't break out that high. It hasn't taken out that high over there.
Yeah, this is a pretty strong neckline.
Yeah.
But if it does break that, you're going to get like an inverse head and shoulders, very tiny little shoulders, big head. Not a beautiful, but that's got a long way to go to break this neckline. I think the short position seems more likely on the weekly time frame. Got that engulfing.
We need more. Just need more.
Just need a bit more. But it would be interesting to see, Michael, the strategy that you are trading. You are seeing a short position lining up.
Mm-hmm.
So that would be very interesting to see how it plays out and whether the pound US dollar follows course. Because my bias is short, but not short for a trade, just short for. Yeah, look, it is very difficult to trade in those particular. It's much easier to wait for a key level and then trade on those levels. Much easier trade. So it makes more sense to wait for those. or the DX, the dollar index. Let's have a look. Well,
Same
the
place.
thing about yeah, it's the weekly time frame. So one candle a week is all you're getting. That's all you're
I need
getting.
more.
So
I want more.
but on the smaller time frames, we can have a look. I mean, I'm bullish. I've been bullish for at least a lot, since this engulfing candle. So I do expect this to go to the 105 level, but we'll see if we get there. But I think it's probable for us to get there. The probability is definitely there. And on the daily time frame, it's like we got that breakout out of that level, and now this is the retest phase. And I think on the 4-hour time frame, we saw a bit of more range action, if that's still the case, right? This was let me just zoom in here. That was the resistance area that we broke through. This is where we broke out. And then also a range. It came back to test the support level now a few times. It actually broke out here at one stage, so we're back above it. I mean, it's kind of very similar to the pound US dollar chart itself. It's just this. I do think it would make sense for it to just push up a little bit higher before it comes back down. What are your thoughts?
It, but I mean, again, it's decision zone, because I'm seeing a bearish scenario here as well. There's a diagonal trend line from that macro uptrend, which might be acting as resistance now. But yeah, it needs it. We want it to go up. We want healthy movement, right? Regardless of whatever direction we're going in, right? So that's what we want.
Yeah. So I'm not sure if that was helpful, Andre. It's ranging. What do you want me to say? No, it's ranging. I mean, it looks very similar to yesterday. Like, this is the 4-hour chart. So yesterday was the 31st. So this was about our session, and it's literally trading at exactly the same price. So nothing has happened, hasn't moved, a little bit up and down, but it's pretty much exactly the same.
Do you want to draw that diagonal line on, just to have a bit of perspective, just to support
this one? Yeah,
and just see how that's impacting the price.
You mean?
Not there. I mean on the other side. Yeah, that's good. We've got that. Let's do another one. One on the keep that one. That's good. But then one on the underside of the price action.
Oh, you mean like down here, up there?
Yeah.
Okay. Oopsie. From here to, you mean like up here?
Yeah. Just
there.
Down. Yeah, up. It's in between there, down and down. You see where it should act as resistance. So that's it. Yeah.
Okay.
Yeah. So there's a few bearish scenarios for sure, but indecision time still, right?
Yeah.
No, definitely.
No idea.
No, it's moving sideways. It's not as clear as No,
I mean that upper trend line, it hasn't got enough meat to be much of a resistance level. So yeah.
So nothing, just nothing.
Shall we? Do you mind if I just look at something which isn't dead to finish? Is that all right?
Yes, please.
Because in the I was scrabbling around today to see what's what. This is ADA, and it had a bit of news yesterday, with essentially derivatives listing on Coinbase, which is pretty big news for ADA. So futures contracts are now available through Coinbase. So this obviously would have been a straightforward buy the breakout trade of this pattern, so close to support. Just to clarify, this support range here, this is where we've been. This is pretty good bouncing off point. So we've had this move though, right? And you could say, well, you just wait for a breakout of the next level and buy the retest. But is Bitcoin? Oh, hello, Bitcoin. What are we doing now? Come on, Bitcoin, you can do it. If Bitcoin is underneath in this area, how much latitude is this news going to do for ADA? We're cooking. This is only like the 1 hour, but let's just have a quick look to see if we can find a trade here. Yes. So look, the reality is that with this chart, I don't think a breakout retest entry is a good idea at the moment, right? Because we could just with the market not being very, very hesitant with the bearish slant, this probably is just going to come back down, right? The sellers will take over. We've got the 1 day overhead. So this is a nice move. Take this as a bullish signal, and then you want to try and figure out where you want to enter. And you've got this range. So the way you could potentially organize it is you could look at the context of the market. And if Bitcoin is still, in this downtrend, it hasn't given us any really bullish signals, then this is the line. This is the bottom of the range. If you're thinking of a long, you want to come in at. Be very, very conservative, right? But if we get because we've got the 50 coming in as well, if we do get some more bullish context and Bitcoin is in a different position, say it does get up here, maybe this range, and then ADA is coming down, then you could maybe start scaling in at this upper support line where we've had bounces off before, and then just try and scoop it up. And let's just see what other people are thinking. This is a waiting trade. I wouldn't say definitely enter, but you can see other people maybe trying to front run the 50 MA buy here. This is a first buying opportunity, but this is clearly the area. And because we're in risky territory with the market at the moment, Bitcoin dominance is still, flashing signs that we may continue higher, which would push the altcoin market down. So this is definitely a wait trade. Wait for it to come down. You've had a bullish signal, come in at the bottom following that bullish signal, because obviously you don't want to come in here, but now we've had a breakout. So interesting trade maybe over the next few days with ADA to ride a bit of that news momentum up. We just want to make sure we come back down here. So this would be a first buy entry. But if things are really bearish, then maybe scale in throughout this range. So you got a bit of control. But any thoughts on that, guys? Bit of ambiguity here, but we've had a nice move out of this pattern. Any thoughts?
Yeah, well, Andre agrees. He says he's looking for some kitten. I don't know what that means. But,
Kitten. I don't know what that means either, but I'll check it out, Andre, I promise.
Yeah. And hi, Robert. Nice to see you again, man. So I didn't ignore you. Just, Michael talks so much. It's very difficult to say hi to you.
Michael does not talk too much.
How dare he?
We talk too much.
Right. No, I agree with you. I would definitely want to see it kind of retest maybe one of those areas before actually going long. Yeah.
But context is important.
But what would you? Yeah, the context is important, because just if it just goes down to that level, not enough to buy, is it?
No. So I think this might be the rule you could follow, right? You could say if Bitcoin is still, if Bitcoin is still here and not up here, right, then presume we're going to get some selling pressure after this news pump, right? And then come in for a hard buy, maybe on the support line where there's been a lot of buyers, right? That would be it. So it's going to be a hard buy at support, I think, right here. In this area, maybe you could start scaling in unless something changes. If something changes, we come up into this range, perhaps, then you could maybe come in a bit hotter, maybe at this level, right? But if we remain in this range and Bitcoin remains where it is, as low as possible. So if you do get a breakdown, you've got some options and you've got some control. But nice to see a bit of move out of ADA today. It's nice to have some positive news for the market, but still having to search for these trading opportunities, really. So caution is advised, but something to think about. It's a nice range, actually. If we did manage to get an entrance in this area, it's a nice little 20%, put a bit of leverage on it. There you go. But yeah, just thought I'd talk about that for a minute. See, we had a bit of news from Cardano, one of the crypto OGs. But anything else to say on that, guys? I don't think so, right? Not much. No.
Yeah, but so do you trade the shorter time frames, not time frames, but for shorter periods, and not necessarily go for the bigger moves?
Yeah, so I'll do midterm holds of spot, and my most day-to-day trading is low leverage single moves across like the 1 hour time frame, something like that, right? So I might have bought that breakout and just sold there. That's the move. That's the trade. That's what I would have done. Yeah. Okay.
Yeah. Well, makes sense.
I mean, there's no context for midterm holds right now. There's no context for it, right? You could say like, oh, okay, well, buy a support buy and then hold it all the way up here. But I mean, look at all the red, right? I mean, why am I suggesting that? It makes no sense to suggest that, right? We need better context. So, but yeah, just Cardano is a great asset for sure. It really moves when we get a bit of bullish confirmation. And
what about? Sorry to interrupt. What about Cookie? You introduced me to Cookie the other day. I was very
right.
intrigued by Cookie.
Let's see what Cookie's doing.
Do you trade Cookie, Michael? Do you
Nah.
trade cookies? It's
Thanks,
like, I've never heard
Lola.
of it.
Lola said, "Great session, guys. We're just
Thanks,
a bunch
Lola.
of comedians."
That's Cookie. So
the cookie is crumbling for sure. Look at that.
for sure, yeah, that's Cookie crumbling. I'm not going to even try and find a trade there, right? I'm not going to do it. I don't want to do it.
Yeah. Okay. Well, I don't think there's only like looking for entry opportunities. Andre says he's looking. Are you looking for opportunities right now, Andre? Or how do you mean? Or is that what you mean? That's what I'm looking for. Some kitten means. That's what it means. You're looking for entry opportunities.
Yeah,
Okay, that's
Andre, you're a legend, but I need to know who Janine is.
Hey man, that operation was not cheap. Okay.
Each to
Joking,
their own,
joking.
but
There was no operation. I promise. It's Jannie. Promise.
all right.
All right,
to see you
guys. Great to see you. I'm gonna go.
All good, delirious. See
Great
ya. Have a
session,
good one.
guys.
Have a good.
We'll check out y'all tomorrow.
Cheers. Bye bye.
Hello, everyone. Howard,
Hi,
Eamon,
Sam.
how are you guys doing?
All good. Eamon, nice to
Oh,
meet you.
nice to meet you, Howard. How are you doing, Howard?
All good.
Sam,
All good.
how was
All
your
good.
day?
All very good
Very.
on my end. How's both your trading days been today?
Yeah,
Yeah,
not too. Sorry. Yeah, not too bad. I'm kind of sitting short dollar yen, and it kind of went down and came back up to my price, and it's kind of hovering. And I'm sitting long cable sterling dollar, so looking for that one to it snapped back from that support zone we keep talking about. So
Oh, yeah,
could be could finally. You never know.
finally be
yeah.
it.
For me, actually, I missed one opportunity, so I didn't trade today.
No problem.
But
It
yes,
happens.
actually, I did one recording yesterday trade. Maybe if we can
Yeah,
start with it.
of course, absolutely. By all means. And to all the viewers, Robert again. Hello, Robert. You go ahead, do your work call. Don't worry. We'll still be here when you're back. And I'm assuming Andre's in the chat as well. So, Andre, nice to see you again. And anyone else watching?
Sorry.
No, take your time. Take your time.
How was your day, Sam? Any positions?
I took two, both basically the same trade. One, I got in I thought I got in at a good time, but it started going against me and I got out at a loss. And then I jumped in a couple of minutes later again, and then that one was successful. So kind of day. Could have been better, but these things happen.
I don't know if you can see my screen.
I can pop it
Not
up
yet.
on the screen. All right, it's up.
Here we go.
Yes.
Yes, we can see.
Okay, so I will start first by showing let's start first by the daily, weekly, how it looked like, and then I will show the recording. So on the weekly time frame, so we are sitting, as you know, Sam, I explained it last time. So I trade this type of candle. So took previous week, close bullish, and then we went higher. So for me, this is all an area of interest. So we tapped here multiple times. Here we are creating, like, let's say the inverse of this candle, what I call it, like the handshake, because here the buyer, like the buyers were in control. As you can see, we have a wick and we went higher. So now it's like maybe we could break this area. I don't know if the tomorrow we had something about tariff, we could break this area. So, but still we didn't break it. We closed inside this support here. On the daily time frame, actually, this is like, for me, a typical trade to take. Big bearish candle at the end of this small trend. Took previous week, closed bullish. Today was really nice to take buys. But about yesterday, let's take a look. So yes, it was a little bit risky trade, but it was more of a scalp because we were sitting in a weekly zone. And I saw actually on the 15-minute, 1 hour, I saw like this similar candlestick that I trade. Also on the footprint, it show aggressivity. So we had like this, we had the supply, 1 hour supply zone. And before the open, we had like, we took this previous week and we went down. So on the 3-minute time frame, actually this trade was based on the 3 minutes.
Is that the time frame you usually use? 3 minutes?
Yes, in footprint I use the 3 minutes and the 5 minutes for confirmation. Yes.
Very interesting. Yeah. You're the first person I've ever met to use the 3-minute time frame.
Okay. Yeah. So as you see on the 3 minutes, we had similar candlestick. Like we had it on the 15 minutes, and on the 3 minutes we had it here at the open. So we took the previous candle and we closed bearish. The size of the candle always matter, because like when we took previous week, it means we took some liquidity. I would like to see just small candle that close here, so I take the continuation. But here it happened like so aggressive that I had to wait a little bit to come to those zones here to see if the buyers will be absorbed, like the same story, buyers absorbed and jump in. And here is the recording. I don't know if you can see it. Do you see?
Yeah, we can see. Yeah.
Okay. So here, like, this is the 3 minutes candle. So we had like big clusters. We had like 343 here, 337, some big cluster here. So
Is this
actually,
is this
yes?
the delta footprint or total volume that we're looking at? It's delta, right?
Yeah, delta.
Nice.
No, this one was the volume. Sorry, this one was the
Total volume. Okay,
Yeah.
I'm with you. Yes.
So sometimes I switch between the volume and the delta.
Yeah,
So
yeah.
I saw like big cluster of volume like here. Actually, I want to sell from here. So I was waiting. I saw this 3 minute candle right here that we had some big cluster. What I like always to see is when I want to take sell is big cluster at the top of the candle, not in the bottom. And if there is like big cluster in the top of the candle, normally logically it should be like instant continuation. So we have big cluster here. I wanted to enter here, but again, you can see here at this red candle here, we had in the bottom of the candle, in the low, we had big clusters like 569, 631. So I want to see, I always wait for the next candle to see if the momentum, like normally if it's to take sales, if it's sellers, we will see like instant continuation to the downside. But we had like when the candle was open, we saw that there is like momentum. So I waited for this candle to close, and I saw those sellers that were really aggressive. It happened like on a couple of seconds.
Yeah.
And then I jumped in. So let's fast forward. Yeah, so here I was actually hesitating because I saw some big clusters here at the top of the candle. And yeah, so in the top of the candle, I saw like it's pushing higher. But again, I have this big cluster here in the left. So I was waiting, and then and then I saw like sellers step in, big cluster that's here 240. So I was waiting for this low to get taken, and here we had like the first area of maybe the buyer will step in.
Yeah.
So I was monitoring here those, as you can see, those big clusters here, and I saw big cluster at the low of the candle. So I was ready to exit. I think here I moved it to break even when I saw those big cluster in the bottom of the candle. And again, here I call it also like the handshake, because here we had the buyers, and at the same like price, we are, like, let's say there is a switch, something is happening here. So yeah, I waited, and I exit somewhere here. I have another recording actually that is showing the entry, if it's okay to show it.
Of course.
Yeah, it was here. So that's
Yes.
So here, like we had, if you can remember the footprint chart, we had like big cluster in the bottom of the candle. So and then I moved my entry here. So at least I will get out with some profit. Here you can see like big clusters.
Yes. The market plays games on people like this. It's very annoying when stuff like that happens.
Yeah, and then that was the trade. So and then it will. When I saw this cluster, I was switching. When I saw this cluster, big clusters here and big retracements, and then I exit.
Yeah. Very nice.
Yeah. It was good trade.
Beautiful trade.
Yeah.
Beautiful. Yeah, I mean, I really like. I mean, obviously, you're a footprint guy as well, so naturally, I like what I see. I like what I see.
Yeah, I think we are trading a little bit similar, like just
Very similar.
absorption. Yeah.
Very similar. Do you use the depth of market as well, or is that something you don't use?
No, I don't use it much. No.
Okay, yeah. So like sometimes I use the depth of market, not so much to base my trading decisions, but sometimes if you see big orders on a depth of market, and then once it gets to that level, what the footprint then prints can give you a good idea whether these are people exiting, new people coming in. So it's sometimes quite useful to use. It just gives me a little bit extra confidence sometimes to hold a trade. If I see like there's no big orders in my way towards my take profit, I might hold it a bit longer then. But let me show you what my trading day looked like. I'm not gonna lie, this really annoyed me. Yeah. I'll first share the chart and then I'll go to the recording. So let me just pop that up on the screen. There we go. Right, so the chart. So Howard, you were with me yesterday's session, right?
Yeah.
Yeah. So I didn't have a good directional bias for today. I really didn't. Like today was like even from yesterday, oops, I just dropped something, but never mind. Yeah. Today I was very kind of I truly don't know what could have happened, right? So I still had this line drawn from yesterday's market where I thought, okay, might come up here and then we'll go back down, and we just kind of kept going sideways. So the trade I took was just by market open. So here I shorted the market here. It's so annoying. I shorted it right here pretty much. And my target was the last low. So this low here, this was my target. And I had my stops, just above this high here, right? And it was going very well. We got so close to my take profit, and then it started retracing up. It started going back up. And I was like, no, don't you go up. So I held it, I waited. And as it got kind of against me, probably around here, I manually exited. And then I waited again. It kept pushing up. So it didn't stop me out, but I got out manually. And then I jumped in at the top of these wicks. But then I got out about here. I didn't hold it to my take profit because the market was just being so annoying. It was so choppy and nasty. And it didn't have enough momentum. I mean, on the 15-minute, it looks nice and huge, the candle. But when you were looking at like the 1 minute or lower time frame, it was this choppiness here. A few minutes of just extreme choppiness, and I got out basically. No, it wasn't here. What am I talking about? I'm making stuff up. It was around like here. You can see the wicks, just how big they are. It really was indecisive. I got out around here somewhere. So I'm going to share the recording because that will show it a bit better. So give me 2 seconds as I do that. I'm going to have to present the full screen, I think. Yes. Pop that to stage. Okay, here we are. Right. So this is both trades are recorded in this one bit. So I'm going to forward to where I actually entered. So I entered just around here. Now I was very confident we're going to go down back into that volume gap, which we did in the end. It just decided to jump up for no reason, just to take out people's stops at the top, which was very annoying. Again, main reason I'm jumping up is we're going against the buyers. I can see buyers are like this 700 here. Contracts. We didn't really have that heavy volume, but it was higher than usual for what we had today. So, and then again, we had a bit bigger clusters of buyers coming in where it's just not working out for them. and I can start seeing sellers coming in, and it's pushing down a little bit quite well for the sellers. It just has more kind of like in the moment, it just moves easier for the sellers. And my bias at this point, because we rejected this gap in volume at the top and we're pushing down. So I thought this is a slight little pullback, and then we're going to just flood down to my take profit. That was my thinking. So I pretty much jumped in, put on 2 positions, kind of had a look. I saw buyers trying to come in. They're getting absorbed very quickly. Sellers are pushing them down nicely. I put my full position on, and then, you know, set my take profit. Things are going nice. I'm up a good amount. We're getting so close to my take profit. Literally, the wick is right there. Let me go back a bit because I think I just missed it. Yeah, we're getting really nice to my take profit. Here's my take profit down here.
Yeah.
You know, I'm thinking any second now we're about to hit it, right? Any
Cash in.
second now. Exactly. I'm like, oh, what an easy trade. This was a few minutes, bang to my take profit. Beautiful. And then it started doing this. So I'm like, what's going on? So I dropped down to the 1 minute to have a bit more of an investigation. I don't see anything too terrible. I see a bit heavy buyers coming in, but again, they're not really making that much of an impact. So I thought, okay, you know, they're just trying it again, the buyers. It's not a big deal. What's probably going to happen? They're going to go back to this area and then push down. Another little retest. That's fine. I'll hold it. I can hold it. It's not the end of the world. But they just keep going. They just keep going. And if I fast forward it a little bit, at this point I'm getting nervous now. I'm like, the area's kind of holding, but the buyers are actually making progress. They're like, the sellers are trying to push them down. I'm already getting my finger on the close button, thinking this might not work out anymore. This might not work out. And then as they push up, I'm looking at this area here. I'm looking, come on, the sellers need to come in more aggressively, but they're getting absorbed now, the sellers. And I'm like, oh, come on. I give it another few seconds. Come on, just one last push from the sellers. Hopefully they can make something. There we go. It's looking a bit better. I'm like, okay, maybe this is saved. Maybe there's hope in this trade still. But ultimately, let me just go a bit back. The buyers break through this area, and the moment they do, I'm getting out. So it's 1,600 loss before it hits my stop loss, which it would have done, you know, a few seconds later. So I got out a little bit. So I let it drift back up into the area of what would be resistance and like a gap in volume. So I thought, okay, I'm still adamant it's going to drop down. So as soon as I start seeing buyers getting a bit absorbed, I put 1 position on. And now I'm waiting for some seller aggression to come in. So I wait. As soon as I see that seller aggression come in, because I know this area should hold, I'm putting my positions on, doing my stop loss, all that stuff, setting my take profit. I'll fast forward it a bit. And now finally, you know, we're seeing the sellers are finally coming in here. Buyers are getting trapped. Sell pressure is now coming in. So I'm like, okay, this is the move now. Here we go, finally. And so I wait it out. We're still kind of hovering about a bit. I'm just looking at the overall structure, I was a little bit worried looking just at the candles themselves. This looks quite dangerous, right? Because I just sold at the top here. And you're looking at these big wicks here, and now this really strong bullish candle, and I'm trading against that. So I was a little bit worried, but this area seems to be working quite well. I thought, okay, look, even if I get out again, then if I lose on this trade, then that's it for today, right? No big deal. It's a losing day. But I'm still looking at like any kind of, is there anything that gives me a bit more confidence in this trade? So I thought, okay, I'll hold it out. If it breaks this area here at the top, right above, just a bit below my stop loss, like around this area here, I'll manually get out. But we'll let it run, give it a chance. Then it started moving a little bit. Still, the buyers always kept trying to push it up. The sellers would push it down. Buyers kept pushing it up. I'll fast forward a bit more. And eventually, the sellers do start making progress down. Now, this is starting to look a bit better. So I'm getting a bit more confident now. I'm going to different time frames, trying to see if I can spot anything a bit better. The wick is looking nice and big now. got all the sell pressure. There was a nice little cluster there of buyers, so I kind of wanted it to break there. If we break that area, I'll be quite happy. We're going to my take profit. So I'm marked out that area, waiting for it to drop down. And what happens then is just very annoying. Like the market kept trying to, like, you know, the buyers kept trying to push it up. It was just very choppy, loads of wicks. You're seeing these, you know, wick, like we just were a full bearish candle. Now we're wicking up again from these buyers. And I'm thinking, damn, is this really not going to push down? So I wait a little bit longer, give it another few minutes, just before I make the final decision. Then, oh yeah, here we just shoot down. I think it was ISM came out, but it's not really high impact. We shoot down nicely, but then it gets absorbed in that area right there. Got absorbed massively in that area which I marked out, which really annoyed me. So the moment we come back down to it, I give it a little bit more of a chance to break through, but it's still absorbing. I think, okay, nah, I'm getting out. So I get out at like 2 or something. I can't remember exactly, 2 or something like that. So a little profit for the day, nothing too major. But then, yeah, it does eventually just not a few minutes later, but maybe 5-10 minutes later, it just floods down nicely to my take profit. So it was around here somewhere I got out, and then it just floods down and it keeps going and keeps going and keeps going. And then we had this huge reversal, which I didn't quite expect. I mean, I knew this is, again, another gap in volume, but this was a huge move up. And now the market's just kind of ranging. So, yeah, a bit of an annoying day, I would say.
Yeah, bit choppy
just
today.
Because, you know, and I think that kind of proves sometimes you can get the direction right, but you can still be wrong. Do you know what I mean?
Yeah.
Like the overall direction was right. Shorting it was the right thing in that area. But that one candle, it just decided to take out, you know, any liquidity that was at the top here. Obviously got me out on the first trade. And then there was that buy pressure just constantly trying to absorb the sellers. But considering we've been so bearish, you know, I would have expected the sellers to have a bit more power in moving through that area. But yeah, now the buyers really took over, which I didn't quite expect. I didn't expect such a move. I thought we're going to be a very sideways day today. So that move is quite interesting. But apart from that, do I still have any bias right now for the days going forward? I still don't. We could be... This could merely be a bit more of a retracement, and we're going to start flooding down hard. There's so many zones, so many gaps in volume everywhere. This is getting a really messy area. It's getting very nasty to trade. I kind of want this area to be cleared. Either break above or break below. Just get out of this area, because it's not nice to trade. It really isn't. It's just too choppy. There's too much indecision in this area here. The last 2 days, a lot of indecision in this area. It hasn't been moving easily. It's moved, but it hasn't gone with ease. There's been a lot of choppiness, and these wicks have been big. Like if I just remove the drawings, you can see just from the candlesticks. I mean, the wicks are bigger than the bodies on most of them. It's just, yeah, I hate a market like that, but because it just doesn't fill you with confidence.
It might be one of those ones where you had that big downdraft, and then we had a little reaction against it, yesterday, today kind of thing, and now we broke through yesterday's high. We're struggling. Those that are buying the break of yesterday's high starting to think maybe not such a good idea. Could be one of those, as you say.
Yeah.
Once you break through those little lows there.
Yeah, I mean, if I had to pick a side, I would be more bearish still. I mean, just because we got some big zones, which it reacts very well on the zones when like resistance zones the market seems to react better than support zones. Apart from earlier today where it just shot up, but a lot of the support zones, the market blows quite easily through them. But the resistance ones seem to react a bit better. So that's giving me a bit more kind of leaning to the bears this time. But I think tomorrow I'll be looking more likely to short the market still if it gives me an opportunity. But I wouldn't be that inclined to also buy if the opportunity is there. So I'm quite 50-50 on it. Unlike, a few other days, like when we had this move up and then we got to this really heavy resistance zone, like I was all bearish on that day. I wasn't even considering. I was very 90% sure we're going to have a downward day on that day, on Wednesday.
Yeah.
So I wouldn't even look for a buy trade.
Yeah, in this market conditions, if you are a swing trader, you are a little bit suffering because you buy, it goes to your way, Trump tweets something or said something, in the afternoon it comes back to your entry.
Absolutely.
So it's a little bit tricky, but for me also overall, NASDAQ, S&P, I am more bearish. But I think tomorrow it's the tariff decision.
Yeah.
So I don't know about it much, but if the market is expecting already the tariff, I don't think that there will be some big movements unless there is something new that's showing up. Maybe then we will see some big reaction. But yeah, it will be tough tomorrow to trade. So trade safe.
Yeah, lower your expectations. That's what I'm doing. Lower my expectations. Like I'm not targeting. Even today, I wasn't targeting. All the way down here somewhere. I was targeting just the most recent low. In structure, keeping my stops very tight, and yes, it did blow right through and actually went to this kind of area here. But there's no way I would have targeted that as my take profit. And if I would have bought, which I definitely wouldn't have, but if I would have bought, there's no way I would have targeted this area up here. I would have maybe targeted these highs here, So,
maybe Sam, if you could check the footprint on the 15 minutes in this big candle, 15-minute big candle.
Yes.
So if it was sort of absorption, because for me it was really, really good setup, like big candle at the end of the small trend, and then
let's have a look. I'm trying to. Yeah. So this is actually quite a nice setup. You're absolutely right. Look at all the sell pressure that eventually did come through, and then as the market started pushing up, you could see these sellers dropping off, and then the buyers coming in, taking them out. And a good time to buy, if you wanted to be really cautious, would be when you saw that aggression come in right here. Because it's hard to measure whether these are new buyers, right? These big orders, or are they these sellers getting stopped out or exiting the market? Because it lines up quite well. If you were to just look at it from a logical standpoint, there's a bunch of sellers come in. We got 2, 3, 4, 5, say about 6,000 contracts, another 1,000 there, 7,000 contracts. It doesn't really push down that much for them. It is still quite a bit, but then getting out exactly where you would expect break even to be for these people, getting stopped out, starts pushing up, these people getting out pretty much, and these people getting out a small loss. And then this is the fresh aggression. And if you count it up, you got 1, 2, 3, 4, 5,000. 5, 6. That adds up to about all that volume exiting the market in this candle and this candle here. So then there's kind of balance in the market, and any new people coming in are going to be fresh. And then you had this trap here, sellers coming in, getting trapped, and then boom, aggression coming in from the buyers. A nice, expect a nice push up then, which we got quite nicely. Until eventually they're all exiting, buyers exiting, getting out huge. That's massive amounts. Wow.
Big numbers.
So we finally get to that resistance. Yeah. And then it kind of just drifts off. So but even then, even if you did take a really conservative trade, got into around here, had your stops just below that candle, and then targeted, naturally I would have targeted that area there. It's not a bad risk reward. but I probably would have got out here when I saw that heavy selling coming out. That definitely would have spooked me enough to get the hell out. So you could have had, a half decent trade as well for a buy position. But at this point, I was already off the computer. I wasn't even looking. I did not want to trade anymore.
I think yeah, two trades a day, it's enough.
Yeah, exactly. And especially one failed, one worked out, but could have worked out better. It was just very annoying. Yeah, you're kind of sick of it then. You're like, no, I'm done. This market is not for me today. It's just too choppy.
Yeah.
So yeah, that would be my trading day. But can't complain. Wasn't I didn't lose money, luckily. So yeah, I was just annoyed I didn't hold it to my take profit. But yeah, well.
Yeah. So yeah, shall I show you a bit of dollar yen?
Please, yeah.
Let's see what
cheer me up, Howard.
Well, nothing to get too excited about as of yet, but let's have a look. So remember, we were looking at it yesterday, and we had the snapback higher in line with the stock market, and the euro and the pound, they were kind of like easing back. They weren't in a big hurry to go higher. So we had that little reversal candle yesterday, and I think I was saying, okay, that's basically the correction to that first big one down, the outside bar there. So my strategy was going to be sort of to get in short on weakness today, which I did. And let's see, let's just go to the short term stuff. So yeah, but basically I got in once I saw the attempt to the upside there, and then the reversal. I got in on the breakdown. I basically sat through the chop because I'm going to be hopefully holding it for an attack at this low. That's really what I'm looking for. Because for me the big picture is still quite bearish for dollar yen. I've got basically, this is like the long term chart, the first leg down of the bear market, correction like a retest almost there, and then the breakdown here. So what we've been doing the last couple of weeks is just a sort of a corrective bounce, in my opinion. So last week we had that kind of long upper shadow on the weekly candle, and now this week we're starting to break lower, at least to try to break lower. The yen has been a little bit resistant, I would say, to the recent dollar decline. The yen crosses have been quite strong, so you have like euro yen, sterling yen sitting at the top of their range, or at least kind of holding up. Although the action, I think the last week or two has been a bit toppy for me, in that it's the top of the range, and maybe we should head down towards the lower end of the range on a multi-day basis. So I think the yen will start to lead the way. Dollar yen will start to lead the way down for the US dollar. We'll see some yen strength, yen cross weakness kind of thing. So yeah, that's really, I mean, it's not been like most of the foreign exchange stuff the last week or so, last couple of weeks has been very kind of small ranges, very boring. You can't make a whole lot of money. You tend to get chopped up. You buy the break, you sell the break, and it will come back. And we've had some nice moves, but really, I think the only people making money on this stuff is really kind of like perhaps spot traders just grabbing a few pips here and there. There's no real follow through in either direction. The last couple of weeks. So so that's essentially where I am on dollar yen. So like holding that one overnight. I got my stop above 150, the psychological number, where this rally stalled. So don't really want to see it back above 150 from a bearish perspective. So bit of a bounce, corrective bounce, I believe, and then maybe we should start to nibble down in Asia once this session finishes. Let's see. On the majors, so euro dollar and cable, same old story. Really not a lot going on. Still, I think within this correction, which I think has ended a few days ago. Major trend for euro dollar, I believe, is still up. although we've seen a corrective decline against the trend. A couple of strongish days here, and then yesterday struggled on the upside, reversed, did a bit of a doji type thing, and today we're trying to break down, but there's no downside momentum. So this for me is kind of pretty much like perhaps a retest of these lows before it goes again. So I'd be looking at, I think, to buy to buy an upside break either of today's high tomorrow or maybe of yesterday's high if we get any really late strength, but I don't think we will. But yeah, the scenario basically is that we've seen a correction against the bull trend and just looking for the next major swing, at least the next big 2 days to the upside rather than to the downside. Any thoughts on these charts, guys, by the way?
Go on, Aymane.
Yeah, actually, like Euro USD, like it's quite bullish. I think, like from my perspective, if we're gonna continue another leg to the upside, I think we had to make like the buyers to wait a little bit. Like it's psychological game, so I think we're gonna stay a little bit in a range, like make them like exit their position and then maybe like go higher. Like I can share screen, maybe see.
Sure, go for it. Yeah.
See if any level are there. Let me check. Yeah, it's the 6E. Yeah. Okay. So let's do together like a top-down analysis. How it look like. So yeah. So we are sitting. For me, this is like a supply zone. So this is a supply zone. So we have like, this is the biggest candle. Like if we count like 1, 2, 3, 4, 5, 6, it's like a couple of weeks. So we had this big push, and then like this 2 weeks ago, we took this previous week, we closed bearish. So there is two scenarios. So or we're gonna test here, consolidate a little bit, go lower, or break this zone, and it will be we have a massive push to the upside. But I am more bearish than bullish. If let's say the daily, if we go to the daily, we have a little of, let's say, failure like this. Some call it like W pattern or U pattern. So the failure. So actually the buyers try to push here to break. They failed the first time. Try again, failed again. We break lower. So yeah. So we could have sort of something like, let's say, so we had failure like here. So if we stay in a range and fail something like this pattern like here, maybe we can see a move to the upside. But otherwise, like if I see a clear candle to this supply zone right here, like big candle without any wick, like some like big size candle here, I think we're gonna reverse to come retest. Let's say I have one zone marked here, it's 4 hour. I will draw it. I think this is, if we will break this range here, I think the 1.06545 is the target for it. Yeah, so, but yeah, I think we're gonna range a little bit, make the buyers tired, make the sellers tired, and then if we broke lower, I think the 1.06 is the right target. So yeah, if we check the dollar, actually, like there is like inverse correlation between the dollar and the euro. So as you can see, like the dollar still holding this area that I drew last time. So I think like why I am bearish in euro more, it's simply because like we are still in technically, like from technical perspective, like we are sitting in this area right here, which is really important, because I expect if we're gonna break this area here, the dollar will melt down. That's my prediction. I think the dollar like will, there is probably high chance that will hit the 105 200, 105 400, and we will stay in this zone for quite some time. So yeah, so I am more, let's say, for upcoming few days or weeks, like small move to the
Positive, yeah,
upside.
on the dollar, yeah.
Yeah, positive on the dollar. And so yeah, by default, like the euro, like normally if this expectations happen, like the euro will go for a small retracement to the 1.06. So yeah, that's my projection.
Okay.
Interesting.
Yeah. No, it's yeah. There's lots of different opinions on the market.
Yeah.
Let me show you my longer term stuff just to give you an idea of what I'm thinking on the on this one. Just one second. So if I
Sam,
go to the
when is last time you trade euro, Sam?
Years and years ago. I've always been indices. Well, yeah, the S&P 500. I mean, last time I traded anything other than S&P 500 was gold. That was last year. I traded a bit of gold, but again, didn't really like it. What happened towards the end of last year? When I say towards the end, I mean like maybe October or something. Gold, the futures gold price and the CFD gold price, they started like the charts are usually very similar, but they started drifting. I noticed. So I would like analyze on the futures, enter on CFD gold, and then the market will be going up on the futures. I'm like, oh, okay, that's good. And I'll be looking at on my position, and it's not going up. And I'm like, what the hell's going on? Like normally they mimic each other.
It's funny because I had the same thing. Like in the CFD, they stopped me out because they took the high, but in the future still they didn't take the high. So it's
it happens.
the difference.
Yeah, and that's when I just thought, you know what, I'm sick of gold. Actually, I don't need to trade gold. I'm just going to do one trade a day. Just use the S&P 500. It's never let me down. Why am I even cheating on the S&P 500? You know, I'm married to that.
Stay loyal. Married.
Exactly. I'm staying loyal.
Exactly.
So
Yeah.
I'm not going to be enticed anymore.
No
by
temptation.
anything else. Exactly.
Yeah. So yes, obviously I've got kind of views, wave counts, and things like that. But something else that I like to look at is on the weekly stuff. Is when you get a big kind of 1 or 2 week move or thrust in the direction of the trend, and then you get a little correction where you get contracting ranges. So for example, let's just this last one here. So you get 1, 2, 3, and then up there to the top. Then the ranges kind of contract, and then you get that long lower shadow back up again. And then once you get the break, up you go again, that kind of thing. Another one here. So 1, 2 big weeks up, then a couple of small weeks there, long lower shadow, nice close, boom, up you go again. Over here, several weeks up, long lower shadow, small real body kind of thing, boom. Another one here. This one I guess is a little bit similar because it's quite a lengthy weekly candle. So a massive thrust up there, a little rejection there, and then long lower shadow here, then up we go again. And a lot of those patterns on the way down as well, kind of thing. So big move down, small kind of ranges here, little upper shadow there, down, same thing here, big move down, long upper shadow, back in, down again. And I think we've got a similar kind of setup here on the weekly. So obviously you've had that big move higher, settling into very small boring ranges. So people get a little bit, fed up with the whole thing. It's breaking out. No, it's not, and then I think the trigger obviously will be the break of last week's high, because I think once you break the high of the long lower shadow week, then away you go. So I think for me, the ultimate trigger is 108.58 and a bit, which is not a million miles away. It could happen, tomorrow. But I think we've got that kind of setup in play where you've had a big move higher, you've had a couple of weeks going sideways to down, and then once we start seeing a bit more strength, then away we go. I mean, there's no reason why if we took out the low of last week, then maybe you could be onto something there for the deeper pullback. But I wouldn't want to bet on it myself. I wouldn't want to trade in the looking for the break of last week's low personally, because I see the risk. I see the risk in terms of what it could do. I guess you could with a tight stop or a stop and reverse, but for me, I'd rather be positioned in the direction of what I see is the larger trend, which is still up for me.
Absolutely.
So yeah, but very boring, as you can see from the last few weeks on foreign exchange. So much more fun on the gold and on the stock markets and things like that.
Volatile, yeah.
I mean, yeah, gold is one of those things. Ever since last year, where it just played games with me. I hate it. I hate gold with a passion.
I think we should check gold.
Should we check it out?
Yeah.
All right. Okay, let's do it. Gold futures. Here we go.
You want to start sharing, or should I start?
Oh, yeah. Sorry, I completely forgot. I have to click share, don't I?
Yeah.
I thought you guys are already looking at my screen. Okay, we add it to the stage. You should be able to see it. All right, this is gold futures. Let's have a look. All right, first things first. Let me get rid of trading sessions as well. Don't need that. Cool. All right, I need to get some long direction. Okay, yeah, we're all-time highs, aren't we? Well, we were at all-time highs. Okay, yeah. Well, this makes it difficult now, because now that it's at an all-time high, all I can ever tell you is where it could potentially retrace to. I've got nothing to base on like where it might stop, other than like a psychological level. You could say, oh, it'll stop at a round number, but I mean, first things first, huge gap. I would say at some point we'd expect that to get filled. So that would be a nice area for me just to put down. So if we do get into that area, I'll expect it to get filled and then some sort of pullback. But there is another little gap in volume just above it, which we're entering now. Let's zoom in. So we did dip into it yesterday, kind of pushed up again, and now we're making downward structure though. And we've dipped in again just an hour ago and pushing up against it. I mean, so there was like potential for a scalp, maybe. Would I target the highs again? Probably not. I would be very, very cautious, because look, I mean, it's impossible to tell. Like, I could not tell you whether, this could by all means keep going higher and higher and higher and higher, or, people are thinking this is as high as it will go. I mean, as long as the US, if the US economy gets better and the stock market gets better, then I would expect gold to start probably dropping. I think, its recent surge has been a lot down to investors using it as a safe haven, essentially. But let's look on the smaller time frames in terms of scalping, if there's something that could be seen. So in the long term, I would still obviously be more bullish. I'm not going to be bearish until we break one of these areas, till we break below them, come back down, and then start showing movement down. Then I might be a bit bearish, but then we've got this huge gap in volume as well. So that will have to be at some point taken out. So at some point in the near future, I would have a bearish outlook, but yeah, I just don't know when that's going to happen. In terms of, let me drop down to the 15-minute. Let's look at, okay, yeah, got a really nice little, where the volume drops off just there. That's almost where we touched it just a minute ago. Not a minute ago, like an hour ago. Where could it stop potentially? We've got a gap here, just below the point of control, and then we've got a nice huge gap right up here, which seems to hold quite well. That would be my preferred one. So if we, in the short term for scalping, I would kind of ignore this. The ones in the middle are never that great. But if we go back up to here, I'll definitely probably be looking for a short position. Here, I would have looked for more likely a buy position for a scalp, but I probably would have got out at this zone here. So if I go to the footprint to get direction into, not direction, but to get if there's anything obvious in the footprint. Let me do 5 minute. Sometimes easier to see. When we dipped into here, what happened? Oh yeah, lots of trap seller volume. So I'll definitely have more of a bullish for the next. I mean, just look at the delta itself, 1.44 thousand on the delta altogether, all sellers being trapped, and then we instantly a nice instant reversal. That is definitely trap volume, meaning we're going to take those people out. Where are their stops most likely going to be in terms of structure? Hard one, really. They might be up here. They might be above just here. It's hard to say because there's no real obvious. It could be people's stops could be all over the place. But let me go actually on the 1 minute, see if there was any like one individual getting really hard, badly trapped, because that's always fun to see. Oh yeah. This candle right here. It's most of the volume. People who sold here, they're definitely trapped badly. So this candle would be my, like, I'll be like, okay, there's volume here trapped, and it won't allow, and we start seeing buy pressure come in and people exiting. We broke above it, and every time it dipped into it, it wouldn't allow. That would definitely be a nice little buy position, potentially. And then, yeah, buy it all the way back up to this area here, I would say, which eventually is almost getting there to now. But yeah, because we're at all-time highs, you're kind of half the market is kind of taken away from you. Does that make sense? Because you don't really want to be.
There's no real resistance.
There's nothing to the left of you. Yeah, you don't know where it's going to go. So you're kind of, I mean, right now it's not too bad for scalping because you have like a few little zones you can kind of, you know, mark out and have short little scalps. But in terms of like a long-term trade, I don't know. I mean, the obvious choice would be, oh yeah, we're going to be bullish, but you know, every trend has to come. There has to be an end to every trend, essentially, right? Like, it can't keep going up forever. It has to pull back. Is this really a sufficient pullback? I don't think it is. I think this is the start of more bearish structure right now. I mean, we had these highs. Like, look, we had all this consolidation, built up so much volume, took out that high, and then instantly a huge push down, and then we're getting that kind of bearish structure. So I would look at that push up as more likely consolidation. Eventually, we're going to break down and then maybe stop once we fill that gap. And I mean, is there any like obvious place? We've got the point of control there. Might even get back to the point of control again and then continue going up. I don't know, but this could be the end of the bull trend. It's the first few signs are starting to show.
Quite overextended, isn't it?
Yeah. So I wouldn't at the same time really be expecting, like if I'm going to go bullish, like say I entered at that position there, I just pointed out a minute ago, wherever it was, maybe around here somewhere. Like there's no way my take profit would be like something like that. Like you're just asking for trouble. You got to be really conservative with your take profit, stops really tight, you know, and kind of go for something like that. Small scalps at this moment, similar to the currencies. You don't want to be, you know, targeting ridiculous numbers right now. But yeah, that's my take on gold at the moment.
If you go to like, let's say 4 hour or daily, just to check the volume, maybe the only sign to say for me, like if we're gonna reverse or this is the highest points, maybe it's we squeeze all the buyers. So
Like footprint volume or
no, the current volume, like it depend on time. Lower
ah,
this one.
okay.
Okay.
Zoom in so I can actually
Yeah,
see the numbers.
today we had like
Sorry?
yeah, I will share my screen if it's okay if you
I
finish
can.
the
Oh yeah, absolutely. Oh, I thought you were asking. Okay, I'm with you now.
okay.
I think there's a bit of lag in the what's it called? Like I would hear you talk, I'd reply, and then like 10 seconds later, I'll hear you reply.
Okay.
So there's a bit of lag in the stream.
It's okay. So you can see my screen, I think.
Yes.
Yeah, so let's start first but by some area that I draw for potential buy. So yeah, so basically like those zones, why I draw this zone is simply because I see that there is big potential, big buyers that enter here, because for a candle to like normally go lower and switch, create a wick and switch and close green, like there is always something happen here inside the candle. So that's why you will see me draw this sort of candles as my zones, like demand zones or supply zone. So like for me, I have this area here, 3000, like 128 for potential buy. I have this zone here also, this one here lower. The one you showed us just now, like it was really good opportunity, as you said, for a small intraday or scalp. Like we tapped into this demand here, and if we check the footprint, you will see like the same story again, a small absorption on the 15 minutes. And let me show
Yeah.
the footprint. So here is the footprint. Like, let's increase the tick. So yeah, so this is like what we saw like in the 15 minutes. So we had like the biggest volume, we had like 8,220. Yes, delta was negative, minus 436. We had big cluster again at in the low of the candle. You see the minus 138. Here it was like positive, minus 148. Again, like took previous week, something happened in this minus 200 that you cannot tell when you see it in the beginning. You have to wait to see more confirmation to build a story. And this is the thing, maybe Sam can confirm it about the footprint. And you cannot base your decision just on one thing. You have to see where you are, where we are going, what is the context, and then you build a narrative to it. So yeah, we had like this big absorption here, pretty nice. We took previous week, close green. Maybe if I want to trade here, because we are already in 15-minute like demand. So maybe I will drop 3 or 5 minutes, wait for another absorption or another wick, sort of something like this, to take buys. And if I was scalping, like really scalping, like my target, if I entered here, it will be this cluster here, minus 124. And the next target will be, let's switch to the trading view. So we have like really nice move to the downside, and it will be like my target will be this zone right here. We had really nice position.
Sorry, the screen took a while to load, but your chart's up now. Yeah.
Okay, so we have a lot. We had one setup here like for sales. Again, the same thing. Like we had this big bearish candle that took previous week, close bearish. But again, I don't like when the body is big. So So I have to like wait for retest, go to small time frame. Let's go to small time frame. Let's see. So just to build the context, let's say I am here. So I will wait for, because I will wait for confirmation. So one hour, let's check the 1 hour. So in the 1 hour, we have this sort of candles that, let's say, we have sell limits here and sometimes sell limits above. So for me, like, I will take a trade if it's within my time, take trade somewhere here. So here sellers are pushing, but the buyers blocked them. Okay, here the buyers were pushing, but sellers still hold them. So for me, like, there is some sales limit, they were activated, but those buyers here are still pushing. So when I dropped to the 15 minutes, I got this candle here, took previous wick, close bearish, again big body. So I will wait for big retracement, like retracement at least the 50% retracement, and this go hand to hand with the footprint. I have to build a context, as I said, and this is sort of like my confirmation candle. And especially if we will check the footprints, and I found like an absorption in this candle here, and this candle present, maybe I would take sell here. So it was nice trade to take, like, sell from here. And yeah, so we are in all time, like, let's say we create the, yeah, so we are really pushing higher. There is a lot of geopolitical event that is happening. So one thing that's like a trader should keep in mind, don't try to sell the top, because you will get stopped out every time you, or if you say, like, if it's overextended, yes, it could be overextended, but at the same time, as Sam said, and like, you don't have like any levels you will base your decision of, because it's the all-time high. So maybe if it's intraday, okay, you have some fresh levels that were created during the session. But if you gonna, like, let's say, swing trade from the high, it's risky.
Yeah, absolutely. But yeah, but gold, you know, people love gold. I never understood why.
Yeah. Any thoughts, Coach? How the market will react for tomorrow? Like, what's your predictions about tomorrow? Do you think, like, we will have like volatility increasing a lot? Just for
there's bound to be some of that if we've got a big news event, but I guess the markets are the markets, really. You know, we've got trends and all the rest of it. So you know, once the news is absorbed, then the markets will just get on with doing what they do best.
Yeah,
gold. I've been looking at this thing as a 2832. That should come through shortly.
Oh,
with a bit of luck.
There we go.
Yeah. Yeah. So yeah, I've been kind of watching this unfold quite nicely, and now finally we've got that fifth wave push up. So not that I want to short it, but I wouldn't want to be buying it at these levels. I think the trick was to be buying it after the clear corrective pullbacks here and here. I think that was the trick if you're a multi-day swing trader. But now I think the best thing is just to stay away from gold, really, because whatever you do is going to be wrong unless you're kind of doing, as you say, you're playing off some very short-term levels on the intraday charts with tight stops. But to be going for the next 2 or 3 days up or down, I think at this stage I wouldn't want to hazard that one.
Yeah, no, absolutely. I 100% agree. What other instruments can we look at?
The Dow Jones. Did you ever trade the Dow Jones?
Dow Jones. I mean, it's all very similar. S&P 500. Like, I don't even bother with the NASDAQ, even though it's pretty much identical. Because if I'm wrong on the S&P 500, I'm probably wrong on the NASDAQ and Dow Jones. So I might as well just enter 2 positions on the S&P 500. You know what I mean?
Double contract.
Exactly. So if I'm going to trade anything else, it has to be completely different.
Yeah, I got yeah. If I just a quickie on the stock, the US stock indices. I mean, we've got those kind of like classic double top retests. Those that are looking at the the technical analysis books, and one of the first things that you see, the kind of the double top, and then the retest of the breakout point, and then traditionally you'll get the continuation of the move. So that's the Dow, not as aggressive as the NASDAQ and the S&P. I guess that's probably because there's probably some more solid names in there, perhaps some more defensive names, but yeah, the same kind of picture where you've had a nice extended bull run, retest of the high almost, straight back down, close below the support level, the baseline, the neckline, whatever you want to call it, and then we're just kind of oscillating a little bit around there. But it looks to be last week was a bearish reversal candlestick as well, so I'd be a little bit concerned about this thing on the downside breaking down. S&P similar sort of thing. S&P 500, where you had obviously the extended run here. You had the retest last week, and again a bearish outside week engulfing candlestick. And this week so far, we're just chop in the lower end of the last week's range. It wouldn't surprise me to see this thing start to break down again.
Yeah.
But obviously there is support there from the swing low. So
I think you're right. I think ultimately S&P 5, my gut is telling me we're going down. We're going down probably I mean, even the big boys, Goldman Sachs, people like that, they're all anticipating the S&P. They're lowering their positions on the S&P, and they're all anticipating it's probably going to drop. Now, I'm not saying that they're always right, but do you really want to be buying into it right now?
Yeah.
Probably not. At least wait for.
Yeah, I think also, I don't know, maybe I can sound a little bit pessimistic, but I think there is unexpected event that will come this week, this year, sorry. Like there is more unexpected event that will shake the markets. This is just my opinion. This is how I, let's say, feel. But I think you should, like, if you have money to invest, I think for my opinion, like you should stay cash, because there is like unexpected things coming. It could be war in Europe. It could be something like unexpected, but this is how I see it. And I see like the NASDAQ maybe, and the US markets, I think, will go more down because we just started. I think we are like minus 16 or 17%.
If war in Europe breaks out, I'm moving in with Howard in the neutral zone in Switzerland there.
Yeah. We know how to do it over here. Yeah. Yeah. Avoid wars, definitely avoid wars.
Yeah.
But you're right, Aymane. I mean, anything can happen. I mean, we're living in very turbulent times, and yeah, it is what it is.
Yeah, so unexpected events will, for me, for sure there will be one or two at least this year, and especially what we are seeing, like with the Trump and with the Europe, with Russia. So it's something. It's new. It's new to the market. Like when Trump came to the office, like every investor trader was more positive, like. And we saw it like when he took office, like the US stock like went higher, and there was really positive, and then like everything start to go down. So from my perspective,
even besides everything that's going on, it's about time. I mean, every 10 years or so, you expect some kind of crash. We're overdue on. If the cycle's there, we're overdue on. Do you know what I mean? It kind of lines up with the cycle of the markets, and you know, and you got to think about, like, the US has been, its economy has, how do I put this
Boom.
nicely?
How I put it nice.
How do I put this, like, in
Like
a
booming,
good
like
way? Not booming. This is the thing. It's kind of been a bit of a lie, I think. It
artificial,
hasn't
more
been
artificial.
artificial. Yeah, artificial is a good word. Inflation should be a lot higher than it is. You know, they printed so much money during COVID. I think, I can't remember the exact percentage, but we're talking 80, or I think, percent of the money supply was printed in COVID, during COVID. Like, we should be feeling worse effects from all the decisions made, but they haven't been that bad. I mean, you know, the US is a superpower, of course. They can
They own the dollar, but
yeah, exactly. But I think even worldwide, a lot of people are dropping the dollar. You know, you have things like BRICS, for example. You know, you know, Brazil, Russia, India, South Africa, China. You know, all getting together. There's talks of potentially a new currency. Whether that will happen, I don't know. But what is happening is that they are moving away from the dollar more and more. They want to be less independent of the dollar. The Saudis are no longer selling oil in the dollar. You know, these relationships are slowly breaking down. And while the US is, you know, still very powerful, of course, you could see the beginning, like, there could be a chain reaction happening, and it could be a bubble that will pop one day. I'm not saying this year, it could be 5-10 years, who knows? But if you're looking at, like, an overall graph, I think the decline is slowly starting to occur. Like, we're already feeling it in other Western countries, like in the UK. We're definitely seeing that decline slowly starting to occur, and we're seeing it and feeling it more. I think, yeah, I don't know, but I think it's overdue a crash, the stock market, at least. That's for sure. So if this is the crash, like, I have a gut feeling it could be the start of it. I don't want to say, like, oh, it's going to crash and freak everyone out who's watching, because I honestly don't know. Like, I genuinely don't know. It could just be a little dip and then it will start going to all-time highs again. Who knows? But I feel like, yeah, I feel that sentiment is there generally.
the cycle it's at its end. So
Yeah,
it will be something. Yeah.
I mean, you've retraced all of the post-election gains. You know,
exactly.
So everyone that bought on the back of the election, you know, the new administration, they're all on the wrong side of the market if they're still holding.
Yeah, exactly. So yeah, we're in a very choppy time right now. I don't think we'll have a true answer. It'll probably take a while before we actually get, like, a clear cut answer. But this has been going on for the last month now. You know, we've had that decline, and every time you feel like it's easing off and, oh, okay, no, it was just a dip, you get one of those days where it's just bang, bang, selling, and it just shoots down, you know, 2-3% in a single day, or not just in a day, in like 4 hours, it will shoot down like 2%. Like, that's insane.
I think on Friday we saw, like, how much it shoots down,
2.5 on the S&P 500.
Yeah,
and that happened in like a 4-hour window. You know, I mean, obviously it'll be on the US Open, but, like, it happened so quick, and there was just no stopping it. It was disgusting the way it dropped. It's rare you see days like that, and that I think I'm still affected a bit by Friday, where I'm more cautious in buying it. If it was just a gradual drop, I wouldn't be that, I don't know, worried about it. But it was the way it dropped and the amounts, the contracts that was being sold, like,
yeah, real aggression.
Yeah, it was really aggressive. And I think any pullback we're seeing now, I believe is going to be more just a pullback before we get another one of those aggressive days. Maybe next week after, who knows, we'll get another bang, bang, really aggressive push down again. And this time I want to catch it because I can catch it on Friday.
You want to be there.
This time I want to short it all.
Yeah. Sell everything. Yeah, I mean, yeah, that 4 days. It took 4 days to erase all of that. Yeah, that 2-week rally, basically.
Yeah.
That gives you a clue as to who's in control, I think.
Yeah, exactly. And that's the thing. Like, part of the way I trade as well on the smaller time frames. I think Aymane's internet's cut out, but he'll join us again. Part of let me move it side to side. I don't know why I'm so large. There we go. Yeah, part of the way I trade is I like to look at who is more efficient at any given time. You know, it's not always about the size or who's more powerful necessarily, but who is more efficient. You know, if it takes buyers 10,000 contracts to move, I don't know, 200 points, but it took the sellers only 2,000 to move the same amount, I would more likely want to be selling than buying. You just have more of a chance that a bit more extra sell aggression, we're going to be moving a lot nicer. So yeah. I think Aymane, hopefully he can get back in. I think his internet dropped out. He's got some connectivity issues by the looks of it, because he did just freeze. I thought he was just concentrating really hard, and then I realized he has actually frozen.
Where is he based? He's not somewhere kind of remote.
I think he's based in Poland, actually. I think he's based.
Oh, Poland. Oh, okay.
Yeah.
We're all over the place. We are.
I know. We're really global. Every trading coach is in a different place. So it's awesome. It's awesome. Got 2 from the UK who actually live in the UK. You're obviously from the UK, but you live in Switzerland. And then we have Richard, South Africa. Oh no, we got 3 from the UK. No, 4. What am I talking about? Yeah, Paul. So me, you, Paul, and Walter, all from the UK. Here's Aymane. There we go.
Okay.
But Walter and yourself live in different countries. I think Walter's in Indonesia. You're obviously in Switzerland. Welcome back, Aymane.
Is it just me that I lost?
Yeah,
stream?
I think it was your connection. Yeah.
Okay. I'm sorry.
No.
I thought like they heard us talking about politics and they decided.
YouTube cutting us off.
Yeah.
All is forgiven.
Yes.
Maybe you shorted the power company in Poland, and they're upset. Why did you sell our stock?
You are against the narrative. So. Yeah.
But yeah.
Should we check Bitcoin? I think.
Yeah, if you want to have a look at Bitcoin, another one of those ones I never trade. But the reason I don't trade Bitcoin, I would love to trade Bitcoin, it's just because I won't have the true volume.
Yeah.
Because if you go on TradingView, like this is Coinbase, what you're looking at. So if I'm looking at the volume from Coinbase, all I'm seeing is Coinbase. I'm not seeing volume from Binance, from, I don't know, Kraken, all the other exchanges. So yeah, I'll be trading blind with the way I trade if I trade Bitcoin, which is so. But I would love to. I would love to trade Bitcoin because it moves a lot. I mean, it could be quite exciting.
Yeah. There's that double top that we saw on the double top that we saw on the S&P. Same.
Same.
Kind of,
And like you said, Howard, like this double top, like it's a failure. Like buyer try to break, fail 2 times. So I see like 80-70% of the time when we have this double top, like this double failure, most of the time we break lower. And so for Bitcoin, like it's a little bit tricky because we are sitting in this weekly zone right here, this weekly demand. So we had this sell-off big candle here. We tapped this demand zone. So again, same thing, took previous week, close bullish. We are trying to push, but I am more bearish than bullish. I think the scenario is, we can come to the 94K, or we can test this weekly zone more deeper and create, like how Howard said, like double here, double bottom here, and then maybe go higher. So yeah, but my expectation is more like bearish than bullish. So we will see how the price will react in this zone. Again, we could
Zoom. Could you
Mhm.
zoom out ever so slightly? Just zoom out a little bit and then push the chart. Do you see a potential trend line forming there? We got three connects, like an upward trend line. If you're looking at
From
the
here?
most recent from the weekly, no, from where it started, the last pull down, the last low, not this. Yeah, there we go. Does that connect up? You got 1 and then 2 a little bit, 3, yeah.
Yes.
So
Yeah.
maybe who knows? Yeah, and that's the weekly, so you'd expect that would have a bit of oomph to it.
Yeah. So as I said, we will see how the price will react to this zone. I think we're gonna test it more deeper, stay in a range, and this align also with multiple like assets, like the dollar is in a weekly zone, the euro in the weekly zone. So we could or have a clear push upside or down, or stay in a range again to make the buyers and seller a little bit tired, take some liquidity. So like all the time, like the big money take liquidity in ranging markets. So yeah.
Yeah. What do you think long-term Bitcoin, Aymane? I'm talking long term. I'm talking, do you think it's going to reach 200,
Zero.
300?
No, zero.
You think 0? Okay.
Yes.
I'd love to know why.
For me, like I don't know, but I think it's 0. I think like it's
because of maybe like legislation comes out that just
it's not legislation, but also like in the beginning, like Bitcoin was created, let's say you are free, there is no government included in the process, and now like lately they want the government to be included in the process. And for me, like there is no I believe there like of digital currencies, but I don't think like that Bitcoin, let's say, will make people rich and go to 200, because like everyone knows Bitcoin now. So for me, just this phrase, like everyone knows Bitcoin, everyone hold Bitcoin, for me, like it goes against how we believe about the markets, like buy the rumor and sell the news. So yeah, for me, I could be wrong, but it's okay. I am more, let's say, a Ripple guy.
hey,
So
there's no right or wrong. This is the beauty about
yeah,
opinions like that, because there is no right until it happens. There is no right or wrong. Like,
exactly. I have a little bit in my portfolio of like XRP. I'm a big believer of XRP. Again, same thing. Like 1 year ago, like they were attacking XRP, and for me, it was like this is the opportunity, And I took a little bit of risk, not much, and yeah, it's going good. But do you hold some any?
Yeah.
Sorry,
Howard.
I was going to say it looks negative to me, like the stock markets, at least in the short term, in the trading time frame that I like anyway.
Yeah. I mean, I don't know. Bitcoin is one of those. I have no idea.
Yeah, it's had a good run. It's had a good run, and the thing is, it likes to sort of decline by like 70% every so often. That's a real store of value for you, isn't it?
I think this is the thing with Bitcoin. I think because it does have, people make so much money. The people who buy, like when you say, drop 70% and then it goes up to, all record-breaking highs, and everyone dumps it then, because of course, if you're up like stupid amounts of money, you're making millions, of course you're gonna get rid of it, and then it has these big drops again. And I think because it's done it a few times now, every time it drops 50-60% people are buying. People are putting their life savings into it because so I think there is still some highs to be made with Bitcoin, but do I think like the real rigid believers who believe it will take over the world and all that? Absolutely not. Never in a million years. Like it's just never going to happen. No central bank's going to be like, yeah, go on Bitcoin, take our place. Like never in a million years. No. Or the Federal Reserve. Can you imagine giving up their power to Bitcoin?
Yeah. It's never gonna happen. Like it's.
Yeah.
So like, do you hold any crypto, Sam, or no?
Never.
Yeah,
Never. I bought once, like during COVID times when I had a friend. He was like, "Oh, you're gonna buy Dogecoin," and I was like, "All right, fine." I put in like a few £100. I bought Dogecoin, and it did actually rally up like crazy. And it went up to like £2,000, and I was like, "Damn!" Like, whoa! I get it now. I get why people love crypto. But then also, like a week later, it dropped down back to like 600, and I was like, "All right, I'm just going to get rid of it now." So I don't know. Like, that's my only experience with cryptocurrencies. I just they're too volatile. Everyone is just looking for a quick payout. At least with like the S&P 500 and the more stable asset. Like the S&P 500 is like the golden child of like long-term stable investment, right? A nice 6 to 10% every year. That the S&P 500 is not going to go to zero, or it's not going to just like, it will have crashes every 10 years or so, of course, but it's not going to just randomly one day drop 70% or something. Like,
no.
Yeah.
But it's okay also to keep one small portion of, let's say, of your portfolio, just small portion that will not hurt you. Just on it. Yeah.
You know what it is? The exchanges here in the UK, they don't accept like UK pay like banks. Like you can't anymore. Like the way I had to get my my Dogecoin at the time out was like the most complicated method. I had to send it to some other exchange and then convert it, and then it took, and all these fees and commissions like were taken out, and I'm like, why can't I just withdraw it to my bank? Why can't I just but for some reason they blocked UK banks. I don't know if it's still like that. It might have changed, but ever since then I just never bothered with it probably isn't like that anymore. I think the UK banks are now open to the exchanges, but there was, for some reason, at some point when I was doing it, you just couldn't deposit or withdraw with UK banks anymore. So it kind of became pointless.
Yeah, it's not easy at the moment. I think the link between fiat and non-fiat kind of thing.
Yeah,
but good to trade, I suppose.
Yeah, it would be. It looks like a fun instrument to trade. Absolutely, like day trading, scalping, things like that. I just wish I had the full picture of the volume. I'm sure there's probably some app out there that does it, but I just haven't looked into it.
The issue, as you said, some volume, and also for me the time, because you can not know. For me, I'm price action, volume, and also time, because I want this volume to kick in. And in Bitcoin, sometimes like it's in Asian sessions, sometimes in New York, and I don't want to sit there wait for volume for 3 hours to came to scalp. So it's a little bit. NASDAQ, that the open is 9:30. S&P same. US market open, so you can wait just 1 hour of trading, 1 hour and a half, you finish.
That's it. It's like a routine, the same routine every day. I wake up. Around right now it's like 2:30 in the UK when it opens. Sometimes it's 1:30 depending on the daylight saving time and all that. And then just enter my trades and I'm done. Like, it's the easiest thing, and I wouldn't say it's easy, but like it's so structured and nice. You don't have to like have
that at 9:30 the volume will come. So
exactly. It's predictable.
Yeah. Yeah.
Yeah.
So it's but still, like, it's interesting Bitcoin.
I'm glad
so-
I'm glad something is predictable.
You need to get on
Yeah.
the indices, Howard. We're going to convert you slowly into an indice person when
Well,
currencies.
yeah, I've done yeah, minis in the past quite a bit.
Oh, there you go. There you go.
Can be quite good fun.
Yeah. Well, Howard, me and Sam, we like volatility, so that's why Sam he trade gold and then S&P 500. So he
Yeah.
like volatility also.
Volatile. I like to be wrong or right quickly in the market.
Yeah.
You know, I hate sitting through chop and then
Yeah.
because you have to stare, like, especially footprint charts. You're staring like at every contract, like dun 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 dun, looking at absorption. You can't do that for very long. At most, you can do it, you know, half an hour, and then you're just tired and you just want to get out.
Yeah.
Oh, that's time.
Yeah.
Yeah. Well,
Cool.
Howard, Aymane, it's been a
Thank you.
pleasure. It's a really good session.
Thank you, Howard.
And,
nice to meet you. Thank you, Sam.
Nice to meet you. I'll see you again.
Yeah.
Have a good evening, everybody. Enjoy.
You
Have
too.
a good
You
evening.
too.
Thank you.
And take care, viewers, as well. We'll see you
Take
guys
care, everybody.
tomorrow. Bye bye.